Happy morning to one and all present here. Welcome to the one-day seminar on audit quality maturity model and the precautions to be taken for year-end closure. We have with us stalwart CA MP Vijay Kumar sir, past Central Council member ICA. May now request sir to come and occupy the dais, please. Requesting members, those who are seated on the back can come forward since we have a very limited audience. Yeah, please come forward. As we are celebrating ICI's 75 years of independence, integrity and excellence, let's honor its past, engage with its present and envision its future. My ICI, my pride. Let us all rise for ICI motto song as a mark of respect to our mother and steward.
Yeshasupteshu jagrati Yeshasupteshu jagrati Kamam 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 Pursho nirvimanaha Tadev shukram Brahma Tadevamritamuchyate Tasmin lokashah Sarve tadunatyadikashjana Etadvaita
Thank you, please be seated. Though MPP sir needs no introduction, introducing him to the audience is like introducing sun to the solar system. It's my privilege to introduce sir, CA MP Vijay Kumar, engaged with passion, pragmatic envisioner and a proven executor. Over 30 years of experience in industry and as a chartered accountant in practice. He is the executive director and group CFO of SIFI. Prior to that, during 1999-2000, he was the partner of Yoganandan Ram LLP. Previously, he was head investment banking and company secretary of Sundaram Finance Limited. And he is presently independent director of LIC of India, chairman audit committee, non-executive independent director of Geojet Financial Services Limited, non-executive independent director of Heritage Foods Limited, non-executive chairman of Sella India Software Services Private Limited. He was the former director of National Internet Exchange of India, XBRL India Limited, and Tejo Engineering Limited. He has been the resource person for the professionals on the topic accounting standards, auditing standards, IFRS, code of ethics, corporate law, governance, and the capital markets. For students, over 20 years of teaching subject for accounting, financial reporting, and corporate law. He is the member of IFRS Interpretation Committee of International Accounting Standards Board, and he is the member of IFRS Advisory Council, and he was in the implementation group of IFRS for small and medium enterprises. As we all know, sir was the Central Council member of ICA during 2016 to 2022. During that period, he headed high positions in the several standing and non-standing committees of ICI. Some of them are, he was the chairman of Accounting Standards Board, Valuation Standards Board, Digital Accounting and Assurance Board, and he was the vice chairman of Expert Advisory Committee, Financial Reporting Review Board, Committee on Accounting Standards for Local Bodies. He was also the member of CEE for Dispute Resolution, Ministry of Petroleum and Natural Gas, Government of India, IRDAI and IFRS implementation in insurance sectors, National Financial Reporting Authority, Quality Review Board, and SEBI Committee on Disclosures and Accounting Standards. He has several awards and accolades to his credit. Some of them are, he won National Award for contribution to the financial accounting, 100 most influential CFOs in India by Chartered Institute of Management Accountants, top 100 Roll of Honor by CFO India, and he was awarded the CFO Best Transformation Agent 2021 by Business World. He has authored several books on accounting standards, auditing standards and assurance standards, financial reporting, etc., with extensive readership and a continuous reprints for over 15 years. With this brief, I have great pleasure in presenting before you CA MP Vijay Kumar sir to take us through introduction to audit quality maturity model. May I now request Ranga Ramanujam to come forward and present him with the Kanchipuram Silk Shawl, a health bouquet and a memento as a token of SIRC's love and affection.
Action replay for applause also.
Over to you, sir.
A very good morning. Extremely happy to be here at SIRC once again, more particularly for a technical topic on audit. I hope it's audible here. On audit, and thanks to the new chairperson Geeta and the office bearers for this invite, and to Rahman for the hospitality to be here. The topic is a very important topic. I'm sure many of you have had the opportunity to get some familiarity on this topic thus far, because it's been mandatory from April 2023. It's been mandatory from April 2023. And for those who are now going through the peer review cycles and all, the audit quality maturity model requirements are part and parcel of the peer review audit questionnaire and the audit process. So in that sense, there is some familiarity with all of you. Nevertheless, I'll try my best to give you the background in which this has been developed, so that you get a better understanding of what is the expectation from this particular model and how it helps the audit firm in terms of improving its quality, reduce the risk. Ultimately, what is important for audit firm is, I need to reduce my audit risk. I need to reduce the risk of anything going wrong, and consequently that I am fairly protected for the quality of work which I have done. So as far as the audit quality maturity model is concerned, it's sort of the first country in the world and the first accounting body in the world to have pioneered this concept of issuing an audit quality maturity model. What is extremely common across the world is what we call as audit quality indicators. Audit quality indicators are very, very common in the world. In India, it's very early days, but I would encourage all of you with reference to your clientele, particularly reasonably sized clientele of 300 crore, 500 crore, 1000 crore turnover. You can't do it for very small clientele, but for reasonable sized clientele, I think you should start engaging with the boards or audit committee, as the case may be, in terms of having those audit quality indicators. So audit quality indicators are fairly common across the world, but this concept of audit quality maturity model is unique to India at present. However, IFAC, which is the body where all the accounting bodies of the world converge with a global body, that body has been trying to disseminate to the other countries, saying that Institute of Chartered Accountants of India has done it, why don't you guys also develop this? So that kind of work is currently happening. Before I go further, let me spend a minute or two on audit quality indicators, having opened up the topic. Some of you might have been in employment or even in audit. When you audit your clients and you look at their HRMS or employee related practices, you notice that employees are all appraised quarterly, half-yearly, annually, whatever periodicity they are appraised. And you notice that there are KRAs and KPIs, which the employer and employee sit together and agree at beginning of the year, beginning of each quarter, and end of each quarter there's a review of where we stand on those metrics on exactly similar lines. Just like we have KPIs, key performance indicators, between employer-employee, between auditor and auditee also. The audit committee or the board and the auditor agree at the beginning of the year that these are my key performance indicators for the audit to be rendered during the year. The performance indicators is so much of partners' time, so much of time of the team, so much capacity building of the audit team who is going to be involved here. This is the turnaround time in which you will communicate. This is our process of communication to management, to those charging governments. We agree upon some 6-7 indicators, and those 6-7 indicators become the measure at end of the year to say that yes, I met those objectives, and probably it gives more confidence to the board, and it also becomes a good opportunity for you to say that yes, I have done a good job. Why don't you look at my better fee for the next year, because I have delivered on what we have agreed and all. Or the auditee tells, look, these are what we agreed, but I hardly found the partner coming to office. You told me you'll put a team of 7 people, I hardly saw 4 people. You said you'll spend so many man days and all, I saw only so much. So it's not working, so we will look at it. So that's the model which is there across the world. And India, it's a matter of time before it sort of becomes mandatory. The only fear I have is, when it comes in India, people will go the other extreme and tell, publish the same in the director's report or somewhere in the annual. That's the only fear I have. But otherwise, it is supposed to be a dialogue or an interaction between the auditor and auditee. But it's a matter of time before it's come. And some of these good practices, I think it's important that we develop it on our own, particularly with reasonable sized clients. My experience of clients also these days are with the second generation, third generation, many of them have studied abroad, worked in large organizations and come back as entrepreneurs. Their ability to understand this good practice is also getting better by the day. So audit quality indicators certainly helps. Now, coming to audit quality maturity model. Why I spoke on audit quality indicators? Because I don't want any of us to confuse this document with audit quality indicators. That's a completely different topic by itself. Now, this particular audit quality maturity model which was developed, unfortunately I can't name the people, but the work for this actually happened out of Chennai, and it originally was developed as an audit practice maturity model. So when it got developed by a team in Chennai, sir, when it got, so when it got developed in Chennai initially, okay. So it got developed in Chennai, because I'm used to speaking with my hands, it's free. So it got developed in Chennai. It actually evolved as an audit practice maturity model. The idea was we were having too many small firms, sole proprietor, 2-member firm, 3-member firm. So idea was to give a mirror to the audit practitioners to say, I have been in practice for 20 years, 30 years, 40 years, but how much has the practice evolved? How much has it matured to? How evolved is the practice? That's how this questionnaire got developed. But when the final product came and given all the high decibel around audit quality and things like that, it took its rebranding as audit quality maturity model. I'm giving this backdrop consciously because when you look at the questions which are there here, there are 3 segments of questions which are there, which you have to go through to evaluate. So if you look at those questions, almost all the questions will give you a feel that it helps me understand more about how evolved the firm is regarding the audit practice, and it does not necessarily talk about how good the quality of the work which you do. It does not talk much about the quality. So you get that feel. But the good thing what the institute did is they did this as version 1.0, and they went through very extensive engagement across the length and breadth of the country, asking for feedback. Some of it has been incorporated after due deliberations, and it is now version 1.0 with a very, very clear understanding that based on the implementation experience, Institute will not hesitate to come with version 2.0. So that part is very, very clear. So it's not cast in stone that these are the questions. I am sharing this backdrop because when you start evaluating these questions in your firm, you should not feel that Institute, what have they drafted, why is it so crazy and all. You should understand that it's a document under evaluation, and it's just somewhere you need to get started, so it got started, and I'm sure when version 2.0 comes, I'm sure it will be a much more evolved document. So just keep that at the back of your mind, and rather than being critical about the quality of this AQMM, look at how, as a firm, I can use it for improving my own firm's practices for improving the audit quality which I'm working on. So look at it from that perspective. Now, what you see here on the slide is the Center of Excellence at Jaipur. Institute at present has 2 centers of excellence, one at Hyderabad, lights off, one at Hyderabad, the other is at Jaipur, and I think currently they have an aspiration to open more centers of excellence, which is there. But this center of excellence has been dedicated for work around research and improving audit quality. The closest to this is only in US. The closest to this is only in US, where the US accounting body has a body called Foundation for Audit Quality. What we call a Center for Audit Quality in India, the closest for this is in US, where they call it as Foundation for Audit Quality, where they have constituted a separate organization so that that organization can do research around audit, best practices, do capacity building, etc. So same thing is being done here. And the idea was to do it in a physical format. One, to get faculty, give them facility to stay there. It has hostels, it has houses for faculty to stay also. All of that is, it's a fairly established campus which is there. And the idea is, given the pace at which changes are happening, one is business environment, other is technology, third is around audit, accounting framework, etc. It's important that with some periodicity, once in 5 years, once in 10 years, we need to get refreshed. Ideally in a location where we don't get disturbed, and through a sort of a classroom environment. So that's how it is being conceived as a center with a physical presence. A reasonably good infrastructure is there. It is our institute. Any day you have institute ID card, Jaipur, you are welcome to freely walk in. So just like any of us can walk into SRC anytime, nobody can stop us. You can walk in there. Nobody is going to stop you. It's our institute, our infrastructure. So it's very good infrastructure which has been done. And this particular Center of Audit Quality, what has been done is, apart from full-time staff and campus which is built, the institute has also taken a commitment that for this particular board alone, or Center for Audit Quality, they will have the chairman and vice chairman who will not be disturbed for a period of 3 years. So in institute, all of the committees, every year there is a new leadership which comes. Each one brings their fresh thinking and it keeps changing and all. So here they have taken a very conscious decision that if somebody is appointed as chairman of the Center for Audit Quality, he or she will be there for a period of 3 years. So which means they can implement whatever thoughts they may have, plans they may develop with a long-term perspective. So that's one of the other good things which has been done as far as this infrastructure is concerned. And this audit quality maturity model was developed by this body called Center for Audit Quality, which is a separate directorate within the Institute of Chartered Accountants of India. Now, as I shared with you, and already I've shared whatever, all of these are my personal observations. None of them should be seen as a communication of the institute. Now, many of you would have heard me on this, but I just want to reiterate one of the 3 principles I have strongly believed in always as a professional. 3 of them, but I just focus on the 3rd one. All of us are involved either with reference to preparation of financial statements or audit of financial statements. We are involved either of these roles. The balance sheet, P&L, cash flow, notes to accounts which I prepare as a preparer is a communication to the stakeholders who eventually read it. Similarly, the audit opinion which is expressed is also a communication. So it's not just a checkbox of something which is done, it is a communication. And communication, all of us, if we were to take our own personal expectations at your office, at your home, all of us have this expectation that anyone communicating with us, whether it is my colleague in office, partner in office, the team reporting to me, all of us have a common expectation that the communication which comes to me should be clear. We don't want ambiguous communication. If somebody speaks ambiguous, we frown at the person. We want a clear communication. All of us want a communication which is complete. We don't want somebody to tell us half and then rest half is hidden somewhere. No. We want people to communicate completely, and we want people to communicate candidly and not sugarcoat it and change the understanding of what the communication is. That's an expectation you and I have. Even if you go to a shop or a doctor, anywhere we go, all of us have this expectation. Now, when that is our expectation of communication we receive, then as a preparer, as an auditor, the communication I make, whether it is in the balance sheet, which is a communication, income statement is a communication, notes to accounts is a communication, audit opinion is a communication. That communication should also be clear. It should be complete. It should be candid. It should be truthful. So just like we expect, the same our stakeholders also expect. And that's a principle I've strongly believed in right through my entire professional career. And I thought I should highlight this to set the context of what we are going to discuss. And this is an important one actually. I'll just spend a minute on this. Founder president of the institute, a person for whom my reverence every day only goes up. And among the good things in my 6 years at the council, which I would say was great for me, is the opportunity to read. So among the good things has been the opportunity to understand more about this gentleman, having read the minutes and the speeches of this particular person. 2 quotes are here, but I'll just spend time on the first one, where he talks about, and it's in bold just for attention, where he talks about every profession should develop a sense of social obligation, and it is more so in the context of accounting profession. What he actually implied by that is social obligation not in context of providing drinking water, planting trees, no. So his entire context was, there's a huge economic system which relies on our output, that is the product, our product. And if our job quality is not to the expectations, then the society gets impacted. Take for example, the banking system. The banking system runs on public money. It runs completely on public money. The shareholder money is pittance. The rest of it is, the whole balance sheet liability side is all public money which is there. Now, that public money is given as advances to various businesses. Now, these businesses, if red flags are put up at the right time and in advance and the valuations done properly, that would be a strong alert to banking system. The banking system's risk will come down, NPS will come down, and consequently the loss which the deposit holders will bear will reduce. The loss is not borne by the shareholders. The loss is not borne by shareholders, it's borne by the depositors. Employees will get their salary, shareholders will get their share of profit, but it is the depositors where lending rate is 9%, and you have your interest margin 2% or 3% to cover employee cost, share of profit and bad debts. If the bad debts you are able to reduce by half, which means the deposit rates you can pay to your deposit holders will go up by other 50 basis points. Or the other way around, if I can lend half a basis point less, 50 basis points less, probably capital will be available at right cost, which can help more capital formation, increase GDP, etc. So eventually, if you look at it, the work which all of us do has a very strong impact on the society. And he talks so beautifully there about how the work of the chartered accountants goes and affects the society. And all of us always claim that we do to society, etc. and things like that. If we do our job itself very well, that's a huge contribution to the society. That's the bottom line of the message which is there. Now, I'll just spend a minute on SA 700 before I come to this AQMM because of the correlation which is there. Whatever you see in this one chart is copy paste of SA 700 in one single slide. If you look at our audit standards, right up to 700 series, right up to 700 series. 700 series is your reporting series. It is the product. Your 200 series, 300 series, and all is about planning, how do you do the work, blah blah blah, all the kind of evidence and all that kind of stuff. But the finished product is 700 series. Beginning with 700, followed by 701, 5, 6, all the kind of stuff. Now, SA 700, which is the report, which eventually all of us sign, which gives the assurance to the stakeholders, and which sort of is a confirmation of the quality, beautifully talks about how do you conclude on the report. In fact, before signing the audit report, before signing your 2-page audit report, if you just spend time on this one particular picture which is there, which is nothing but SA 700, and see whether all of this have been done, automatically the quality of the report is assured. So you just need to assure, while the team has worked on the whole audit, as a signing partner, if I am able to get all of these steps which are listed down here, none of this are my original, none of these boxes are original, everything is copy paste from what is there inside SA 700, very small beautiful standard. Now what does this standard talk about? One, the financial statements are disclosing all of the significant accounting policies. So as a signing partner, I need to ensure that whether all accounting policies have been included in the notes to accounts or not. I'll show you maybe 15 minutes from now. FRRB and QRB reviews. Majority of non-compliance is non-disclosure of the significant accounting policies. Most of it happens because of Control C, Control V, or Command C, Command V, whichever device you are using. It is only because of that, because last year, current year, some other client copy, paste. That's how it happens. And last year I did not have this transaction, but this year I have the transaction, it gets omitted. And so that policy does not come. So a signing partner has to ensure that those 6 pages of notes to accounts, significant policy, he goes through it, whether all of them have been worded properly. As a first step, he has to ensure this. And this is not my recommendation, it is SA 700 before you sign off on that. That's the requirement number 1. The second requirement is on consistency and appropriateness of accounting policies. So as far as consistency, all of us understand previous period, current period, whether I have applied it consistently, it's so very important. But what is equally important is the appropriateness of the accounting policy. So it's, as a signing partner, I have to satisfy myself whether the accounting policy, those 6 pages which are there, whether those policies are appropriate or not. I'll give a simple example. When it comes to something like depreciation, something like inventory, you have some small choices like first in, first out, weighted average, or the way you calculate the depreciation, SLM, WDV, all of that stuff. So it's not sufficient that the depreciation is just measured and it's provided SLM. Is that the right method? Is that the appropriate method to be followed? That questioning needs to be done, and that ownership is with the auditor who is signing off. So SA 700 has the second requirement to satisfy oneself for audit quality as to whether there is consistency between periods and whether the policies which you have selected are appropriate for that entity, that period financial statements or not. The third requirement, a very, very important requirement, is reasonableness of accounting estimates, and I'll spend a little extra time on this. And most a good number of youngsters are there, and I would like you all to be conscious of this. As far as financial statements are concerned, whether it's balance sheet, P&L, the whole financial statement is full of estimates. There is nothing actual in the financial statements. And I mean it. There is nothing actual in financial statement except maybe your physical cash in and maybe bank balance. And if you take smaller audits, sometimes it is a figure. Now, even cash and bank balance, if you hold it in foreign currency, even if you have some foreign currency and you are translating it, that's an estimate. That's an estimate. So if you fixed assets, if you look at it, borrowing cost, you have capitalized using some particular methodology, there's an estimation. Depreciation is an estimation. WDV becomes an estimation. Investments, cost, fair value estimate. Inventory, net realizable value estimate. Debtors, less provision, impairment estimate. And same is the case with liability side. You have gratuity liability, tax liability. All of those are estimates. And if you look at some of the debt instruments and all, the way you have the premium on redemption, discount on issue, you amortize all of that. So there's an estimation one. So ultimately, whole of the financial statement is estimate. And even if you look at your income statement also, your depreciation figure, employee cost, which includes your retirement benefit cost. So like this, all of them have some estimates or the other. So as a signing partner, SA 700 says, before you issue the report, forget all the 200 series, 300 series, 500 series, the audit team has done it. But as a signing partner, very clear responsibility in SA 700, the standard which talks about that report. So most of us blindly go to the annexure, copy paste that audit report and do it. No. But it is those 3 pages where the meat of the audit standard 700 lies. It says, as a partner, am I satisfied about the reasonableness of the accounting estimates? Like for example, actuarial valuation. Actuarial valuation, people, did you get the actual? Yes, I got it. So did you write the figure there? Yes, I have written it. But my responsibility is for that actuarial number which is there, 300 employees, 3,000, whatever number of employees. What is the salary growth rate? What is the discount rate which I am presuming? What is the return on investments which I am doing? Now if I tweak these 3 numbers, I can increase my liability, reduce my liability. That choice is with me. And if I am an organization which is 10, 15, 20 years old with an accumulated number, this impact will be even more bigger. So what is important is, I should satisfy myself as a signing partner on the reasonableness of all the accounting estimates which are being used. Similarly, depreciation, life of the asset. So life of the asset. Like for example, some people would write off laptops, etc. over a period of 5 years, 7 years and all. But on ground, they are replacing the laptop every 3 years to the employees, because the younger executives, you give them an old one, is not going to accept it. So you have a replacement model every 3 years. So depreciation says 5 years, but on the ground it is 3 years. Now I have to step in and tell, no, it's 3 years and not 5 years. So you need to do that. So that level of insight has to come from the signing partner. That's about the reasonableness of accounting estimate.
Depreciation, life cycle.
Yeah.
The software 3 years. In the case of perpetual software, they are telling life, entire life is
But you have to make an estimate of, while it's a perpetual software which is there, the organization is not going to remain in the same size at all. So there is a period in which it will go through a refresh. So you need to take a period. And if you take AS 26, you take 10 year period. Next. So the next part is relevance, reliability, comparability and understanding of financial statements. So which means SA 700 expects the partner concerned to actually read the balance sheet, income statement, and whether all the relevant information has been provided, whether it is easily understandable for the user of the financial statement, and convince himself or herself. The next is whether there are adequate disclosures which enable the user of financial statements to understand. And please note, for those of you who have experienced the QRB review of the institute, we call it as a hot review, or the NFRA reviews which come, or the inspections they come and do. The entire inspection is done on the basis that whether your working papers and the product, that is the report, is speaking for itself. Is it speaking for itself? Are there enough disclosures which are there which help a user to understand by himself or herself? If somebody has to come and explain it for you to understand, which means you have not achieved the objective. So you have to ensure that the information which is there is something which the people can understand by themselves. Let's say, for example, during the year there is an amalgamation which has taken place. During the year, company has been reorganized, or some subsidiaries have been created, some slump sales have been done, etc. So when you do that accounting, it has to be communicated in a manner that the user can understand that this transaction has happened, this is the impact, and that disclosures are self-sufficient. Many of us tend to look at disclosures like the minimum disclosures which Schedule 6 has asked and all, or Schedule 3 has asked. Is it enough guarantee for me? The answer is no. Schedule 3 is minimum disclosures. Accounting standards is also minimum disclosures. So if those disclosures are not adequate for a user to understand, you have to exercise the judgment. In fact, in Ind AS, that is IFRS, a project is now going on, and for accounting policies it's already mandatory from April 23. From April 23 in Ind AS, you need not publish accounting policies and all. So those 6, 8, 10 pages are no longer required, because when somebody tells I am preparing financial statements as per Ind AS, which means you have followed the accounting principles or policies which are spelled out in Ind AS. You have to only spell out those where alternatives are there. So in some standards there is a choice of this or that method. Like in financial instrument we have trade date or settlement date. So you tell I follow trade date. So those cases where choice is there, you have to tell. Otherwise those 8 pages or 10 pages of accounting policy is not required. And what is now required in Ind AS now is from April 23 is how have you applied an accounting policy? How has that accounting policy been applied? So there's a business combination which happened during the year. How did I go about applying the same? So that information is required. Instead of copying and pasting that we followed Ind AS 103 for this is purchase method, full stop. It doesn't help. How do we go about applying that particular method is what is required. So that's the next requirement relating to disclosures. And yeah, please.
This is basically they have changed over from significant accounting policy to material
Accounting information.
But if you see that notification, we are not able to get any particular reason why significant change of material. Excepting what I understand is that only material has been defined in 10.
No.
I mean, that's what I'm able to get.
Okay, see, when a notification is done, notification always talks about the old which is replaced and the new wording.
Correct.
The basis for all of this is available in the source documents which you have to go and hunt. Now, the source documents are, for Ind AS the source document is IFRS.
Yes.
And in IFRS, there is at least 2 years of literature available as to why these changes have happened. And there is what is called basis for conclusions, which is not available in India, but if you go through the institute website, you can still access that basis for conclusions, where it explains why this particular change is done and the rationale for changing the same. One point what you said is correct. The word significant is not defined, whereas material is well understood and well defined, so the word material has been done. But the reason why accounting policy is replaced by accounting information, that rationale is given separately, because accounting policy, you are only adding to the volume of the financial statements, it's not adding value to the user. So they said they took up a project in 2016 of simplification of the whole financial statements. in that simplification project, which is multiple projects, one of the projects is this accounting policies disclosure being given away, because as a user of financial statement, I know inventory means lower of this. Why tell again I have lower of this? So it's from that context that the change has been done. But what was important for users is how the policy has been applied, and that's how the change has come about. In fact, on the institute website,
We have not received, I have not seen anything.
I think I don't know whether in the digital learning hub there's one session. I don't know if it is there.
Okay.
Or I'll see if I can write an article next 2 weeks. I'll see if I can. But I don't.
That
I'll
really
see.
would help.
Yeah, basically why this change has been done and what it means. I'll try. No commitment. I will try. Not to share. So that's the important change. But like that, there are other disclosures also which are getting simplified. That's one part. Then is whether the terminologies which are used in financial statements are appropriate. In fact, many have a tendency of using terminologies which are, they feel, why should I use the same terminology, why don't I use different one? What will happen if I do? But there's a reason why those terminologies have a reason. Like when you call about staff welfare, staff expenses, establishment costs, employee costs, those terminologies have a particular meaning. Similarly, when you use depreciation and amortization, both have a different meaning. So depreciation and amortization are not one and the same. Many people have this, like for example, even for intangible assets, they use the word depreciation. So which is not true. The same example of perpetual which he gave. So when it comes to depreciation, it by inherent nature assumes that there's a loss happening in the value of the asset. Whereas in amortization, it does not mean there is a loss. Amortization can happen where the value of the assets are actually accreting also. So amortization is a different term by itself. So as a signing partner, I should see whether my team, my young chartered accountant who just joined out of excitement, said I'll call everything as amortization because it's more global term. But no boss, depreciation is different. No, you need to tell. You need to know these are real life cases. They're real life cases. It's not for the audience now. They're real life cases. And there are many people use word depreciation for intangible, which is not correct. It's not correct. It may suit for few intangibles where value actually drops, but not necessarily for all. Yeah. So consequently, we need to ensure that the appropriate terminology has been used. Then next is financial statements describe or refer to the appropriate financial reporting framework. For company audits, there are two frameworks which we have. One is the accounting standards rules which are there, AS framework, which is AS rules of 2020, old 2006 which is replaced now. That's one. The second framework is the Ind AS framework of 2015. So two frameworks are there. So your notes to accounts which should very clearly spell out that these financial statements have been prepared as per this framework, Companies Accounting Standard Rule 2021 or Companies Ind AS Accounting Standard Rule 2015. So that framework has to be spelled out. And here again, very common mistake, very common mistake. And please mark my words, you can check MONI annual reports. Many of them who are in the AS framework, they will still refer to either standards issued by the Institute of Chartered Accountants of India or they will refer to the 2006 notification, even though the 2006 has been completely replaced. So there's still those mistakes happen. But as a signing partner, SA 700, there's an alert. It says check whether the appropriate framework has been referred to or not, which is there. The next is financial statements in all material aspects is complying with the requirements of the framework. For example, if you take Ind AS framework, we have what is called conceptual framework, which is the mother document under which all the standards are issued. And in that conceptual framework, there's a particular meaning for the word asset. There's a meaning for the word liability, income, expense. So you should ensure that that particular framework, all of whatever you have shown here as income, is it meeting there? Expense is it meeting there? Asset is it meeting there? So that cross check you need to do as a signing partner. Then qualitative aspects of accounting and possibility of bias by management. And this is something which is very common. Managements always have their own perspective, their own objectives. everybody intends to be professional, but there will always be some bit of bias which will set in without our own knowledge. Like for example, don't get me too wrong. Like your children in your family. Let's say your children in your family, you have a son, you have a daughter. At times it's so natural that you tend to take a bias towards your daughter. You know, that bias naturally comes. She would actually cry even before this fellow has hit it. But you would just go and beat this fellow, only to realize later that she actually cried before. So we all go through these experiences. There's that small inherent bias which comes in. It's not by design. Both children are same to me, but somewhere that small thing happens. So as a preparer, as a management, while everybody wants to be very independent, very professional and all, that little bias, my organization, my company, how will people see it? How will the bank see it? So that bias comes in. It's not by design that I want to misreport something. That's not the intent. At least most professionals don't have that intent. But somewhere that little bias sets in. So as a signing partner, I am supposed to see all areas where there are judgments involved, all areas where there are estimates involved. Is it free from management bias? So whether it is relating to provision for bad debts, impairment testing, valuations, purchase consideration allocation, etc. So whether it is free from bias. So the point I'm trying to say is management try to be very independent and biased, but subconsciously somewhere 1 out of 10 elements, 1 out of 20 elements, that little bit of bias will set in. So that particular bias, as a signing partner, I need to be conscious that there is a potential bias which is here. So have I satisfied myself that there is no management bias which has set in there? That's the next requirement. Then materiality of all the corrected and uncorrected mistakes. In fact, in some jurisdictions like Singapore, like we have in our bank branch audits, all the summary of adjustments you are required to actually give, and it also gets published as part of the audit report. All gets published. Here in our practices, what happens is management has prepared something, auditor tells 30 observations, 28 are incorporated, and then we finalize the financial statements. So in the process, what happens is, if there are 30 observations and 28 has been incorporated, which means your preparation process has failed. The internal control on financial reporting has failed. So if auditor is going to give so many adjustments to be done, right from whether the depreciation calculation is done correctly, whether the provisions for liabilities have been done correctly, whether the income accrual has been done, if he keeps on giving you 5, 10, 20 adjustments, and he does it quarter after quarter, which means the preparation process has a serious gap and it's an ICO for failure. So you are required to identify a summary of what are all the corrected adjustments, uncorrected adjustments should be part of your working papers. But in India at this point of time, we all keep it very limited and all. But I will not be surprised if there's a time which comes which will require publishing the same as well. And that will create enormous pressure both on preparers as well as the auditors in terms of how this will be done. So that's again a requirement of SA 700. What the regulator will tell is, look, it's already there in the standard. I'm not asking you to do anything new. It's already there in the standard. I'm telling you, share it. That's all. Or if you're not sharing it to public, at least share it to the regulator. So that's how that ecosystem will evolve, because the standard already requires you to do the same. And then, whether sufficient appropriate audit evidence has been obtained. So signing partners should ensure that for all the matters of audit which has been done, whether evidence is available at the point of time, based on which he forms his opinion on reasonable assurance and concludes that yes, reasonable assurance exists and I can do it. So this is how the whole standard operates. Now, SQC1, all of you are aware, that's the standard on quality for the firms to follow. This is currently getting replaced by international standard on quality management. So this one standard which generally not followed by many, now is going to be replaced by 3 standards, and all of them are focused on the quality procedures within the firm and how those procedures are followed in the conduct of the audit and subsequent reviews. So there are 3 documents which are coming for the quality controls of the firm. So 3 in place of 1. Now, I'll just give a quick snapshot of the findings of QRB and FRRB, just to give you a sense of why audit quality is such a very important topic for all of us to engage. Now, Institute has this QRB now over 13, 14 years. FRRB almost same period, maybe a couple of years more. And both these bodies of the Institute do what is called as a hot review and a cold review. Hot review is done by QRB, which means a senior chartered accountant of 20 years experience and with his team member comes to the audit firm, spends 1 week, looks at working papers and forms an opinion on your quality of work. And FRRB is a cold review where nobody comes to your office, but whatever audit information, audit reports are there in the public domain, financial statements, those are reviewed by a set of professionals. There's a 3-layer process which is there. First there's a quality or technical reviewer, then there's a group, then there is a committee, and then it goes to the disciplinary if action has to be taken, otherwise comes in the form of an advisory. And over time, my experience of the 6 years, every year FRRB does approximately 80 annual reports and QRB does approximately 80 cases a year. That's the amount of capacity they have. They don't have people beyond that. So they do 80, but all the 80, they do a very quality job. I have no hesitation in saying this. They do a very good quality job for as far as those 80 companies are concerned. Now, based on this reviews which have happened during a particular year, every year they publish a document for all those who are in serious audit practice. That document should be a mandatory document for internal training every year, because that document captures summary of all the observations, all the experience in terms of this is not followed, that is not followed, that is not followed, so that we can ensure that we avoid those mistakes because we learn from others' experiences. So this document is published every year, and you have this volume for the last 15 years which is available. And just look at this from a QRB perspective. If you look at QRB perspective, and this is a little dated one for year 1920. I didn't update it by design, by choice I did not update, because even current report there is no difference as far as the finding is concerned in terms of percentages. Now, what you can observe here is about 82% of the firms are concerned. 82% of the firms are concerned. Those cases improvements are required, and about 3% is concerned significant amounts improvement is required, and generally acceptable is only 15%. For a profession which has been there for about 70 years, now inching towards 75 years, and I took 1920 because this 1920 is for listed companies. Listed companies means listed. After that, NFRA started doing listed, Institute does unlisted. I stopped it 1920 because this is a sample from what we are seeing from listed company audits where there is so much of public interest. And if you look at this, it's a very soft observation that you have 82% of cases where improvements are required. So it's for us to introspect. After 70 years, generally acceptable 15%, is it generally acceptable for all of us? Is what we need to do an introspection. And that's why you see regulators, etc., making such high decibel observations on the audit quality. And when the Institute has done 82% as improvements required, Institute generally is a little soft, and they don't try. They play more of a developmental role rather than a punishing role. It doesn't approach that way. And when they say 82%, it's an alarm for all of us as to what is it that we all need to do to ensure that from 15% generally acceptable, how can I take it to 30, 45, 60, 70? It will never become 100, but at least it should go to 60, 70, 80. That should be the case, and that's the journey which all of us have. And this audit quality maturity model is an initiative in that direction, to help the entire audit fraternity and consequently confidence of stakeholders from 15 to 30 to 45 over a period of time. So now, these are the standards which have been reviewed, and if you look at it, majority of the observations are around SQC1. This is a standard-wise non-compliance. Majority is around SQC1, and in SQC1, all of us know when we do audit, quality is required. Firm should have a quality control process, but majority cases it is not there. In fact, morning I was in other event before I came in here, and I can share you from my experience of having worked through the regulatory mechanism. When you want to do an inspection, the easiest area to make an observation on day one, you walk in, same day you can make an observation is on SQC1. Whether there is audit quality control manual, whether it is being followed. When was it last reviewed? That audit quality control of the firm would have been set up when a partner joined 7 years back. In his initial enthusiasm, he put it. After that, not visited, and what the firm has been following is different from what is there in that particular manual. And there are cases where I borrow a manual, quality control manual from another firm, and it forget to even do a Control F and replace. And it happened also. So the point is, so that particular, and this is there in NFRA report, it's there in NFRA report, that they have a quality control process, but the signing firm name is different, and very public domain, It is there in NFRA website. Now, if it can happen for, we shouldn't take it in such a light way. If it can happen for such a large firm, how much are we? I'm not demeaning us, but in terms of our time and ability to focus on quality or have people focused on quality, these are mistakes which can happen. So that is the first area. The second area for regulators, so very easy is when they come for inspection is independence. Within 2 days they can figure out there is no independence. There will be some evidence of that network of the entities where you would have done some non-audit service somewhere or the other, or there is some staff having a conflict somewhere. There is some senior person there, some person here. There is some conflict which gets established. So very easy to establish. The point I am highlighting is these are QRB's observations. 28%. Please note these are listed company audits. Listed company. This is not unlisted company audits. 1920 was the year when all the listed company reviews came up for conclusion. So that was the case. Similarly, we have standards around SA 230 and then 505 on audit evidence and all, where again, very large number of cases, there are gaps which have been observed. And then on accounting standards, accounting policies, cash flow statement, in fact, with financial statements, cash flow statements, so easy to catch. What happens in partners generally spend time, little bit of balance sheet, P&L, they'll see some rounding off, few figures, the signing partner sees. But when it comes to cash flow statement, it's some spreadsheet which it will have formulas like plus at the rate if greater than comma whatever, and then it happens, then that figure will not tally and you have to sign off tomorrow. The guide below there is there, he'll handle it. So for the time being, I'll do plus 700 minus 300 and the figure will get tallied and it is signed off. At best, the partner, what he or she will see is cash and cash equivalent figure here and the balance sheet figure is tallied. So the operating activity cannot correlate because there are so many adjustments plus and minus. But the review board, they are all reasonably smart people also. So that's the second area where you can easily figure out a little bit of analysis that the cash and cash flow statement has been tallied. Okay, it did not tally. So that's how it happens. Let's see, second one. Similarly on AS 15, AS 15 is again, these are all published cases, listed companies. I'm repeating, they are all listed companies. AS 15. On AS 15 again, there are many cases where they take information from LIC premium. That premium is expense. Premium is cash flow. It is not expense. Expense, actual valuation, all that kind of stuff needs to be done. And the disclosure requirements, comparative information, all that stuff needs to be done. If your notes to accounts is less than 2 pages on AS 15, which means something wrong is there. Something has not been there. So that's the third standard where you will easily find non-compliances happening. And these are all published cases. Same case with AS 18 related party. AS 18 related party, again, so easy to figure out. AS 18 from a reviewer point of view, what happens is, in the director's report or the chairman's speech, the person will write, we have an associate company which we set up in Kenya. That is not very near the related party. So later you will figure out that there is a transaction which has happened between the two. So AS 18 you didn't have. So when he says associate company, he meant known company. But he wrote it very casually that it's an associate company. But that has an implication. Now what happens there is, there can be significant influence, shareholding might be only 8-10%. But maybe there's a director who is there and there's active interaction which is happening. So you have to rebut it in those cases that significant influence did not exist. And please note, there are people who take shelter that, how will I know him? He wrote associate. He wrote associate. You have the standard called 720. 720. SA 720 is an obligation on you, on the auditor, to get a draft director's report and to see whether that information and what you are giving here are tallying or not. If draft director's report is not available, and in public sector companies what happens is, I finish audit in May, director's report comes in June or July comes. So if it's not available at this stage, then AGM, when the director's report has gone, it is your responsibility to collect the director's report, cross-verify, and if your audit report requires to be withdrawn, you are bound to go and withdraw the audit report. So that's the power you have in the audit standards and in the Companies Act to go and withdraw the audit report as well. So that's SA 720. So you're required, that's another standard on 18. Similarly on consolidation and again discontinuing operations. Those are standards again where non-compliance are very, very common, non-compliances. And for those who are in India's framework, I would strongly encourage that if there are any capacity constraints in the firm, I'm using the words carefully because India is what has happened in India is, it's applicable to subsidiary associate and all those kind of things. Subsidiary associates can be 50 crore turnover, 70 crore turnover and all this kind of stuff. So an audit firm may not have prior exposure of engaging in that particular framework. So when you prepare those financial statements, if there are capacity constraints, please do not hesitate to consult, engage senior accounting firms who have experience in that. Plain reading, they look very simple, but they're not as simple as they look because all of them have a background of how they have evolved and how they have to be applied for. So all of this, please consult because these standards are easy if the transactions are easy. The moment little complexity, then the guidance is quite exhaustive and the guidance needs to be followed. Like I'll give you a small example. Lease rent. I have a lease rent agreement for 9 years. The first stage accounting is very easy. Present value of rentals, write-off use asset, liability, life is simple. But what will happen in the 6th year is, you will go and renegotiate your rental contract. Either the tenor or the rate of rental, something you will renegotiate. That becomes a lease modification. That lease modification accounting is not as easy as the first time accounting which you have done. First time was got to damn simple. But you choose to do this complexity and hence the guidance is also complex because it intends to capture the substance of the transaction. Substance of the transaction needs to be captured. So particularly if you are using an India's framework, I would strongly encourage, don't take it at face value that, okay, I've understood this headline paragraph. Don't get me wrong. I'll talk about myself. When I grew up initially, the accounting standards framework which we have, you have the bold para and the unbold para. The laziness, when I was young, I read only the bold para. Bold is there, it's okay, it is there, it is there. And when you read the unbold para, it looks similar to the bold one. But there's a prescription also in the unbold. Unbold is also part of the standard. So, like that, what happens is when you read a standard, people tend to read some paragraph which we believe are material paragraphs. It's not that others are imitated, but we believe these are material paragraphs. But the meat lies elsewhere. So in India's framework particularly, I'd strongly encourage that you should do it. And on India's, just borrowing out of the conversation which I had with him, it's very important that if a firm is going to get engaged in India's financial statements over time, you should develop resources within the firm who are continuously tracking the evolution of these documents and all, because only that will capture the spirit of what you eventually need to comply with. The final alone is not sufficient. The basis of conclusions are important. Then there are what we call agenda decisions. They are also very important for us to comply with, because tomorrow when regulator comes, he or she will see it in the context of the basis of conclusion. He or she will see it in the context of the agenda decisions of the IFRIC or IASB, as the case may be. So this is about the standards. I told you about the volume of purchases, volumes which are done. This is about FRRB. Similar kind of experience in terms of standards when we here also look at it. That cash flow statement is a huge non-compliance which is there. So almost similar experience between both of them. So we now come, in this context, we now come to specifically to the audit quality maturity model. Now, as far as this model is concerned, I talked about it is version 1.0. Is it mandated to take a break, or 1 hour I finish and close? Break. Okay. So logically this comes as a break. Continuing our interaction and specifically introducing this model. We discussed the entire background as to why this and all kind of stuff. So now coming specifically to the model. The need for enhancing audit quality, the rationale as spelled out in the document, in this AQMM document, is the fact that users depend on audit for quality of financial statements. The assurance comes from that, and that reasonable assurance is what gives confidence to people that they can rely upon the information which is there. And audit quality, everybody realizes, is a very complex subject. You can't measure it on a parameter. You can't put a thermometer kind of thing and measure it. So it's not so easy to measure. It's a very complex one. So we need to recognize, acknowledge the same. Nobody can come and say that I did a high quality audit, or on a scale of 10 I'm 9.5. That kind of measurability is just not possible as far as audit quality is concerned. And it also recognizes that there's a need for increasing audit quality at 3 stages. The entire document focuses on 3 stages. One is at the engagement level, auditee level, quality to be improved. Then within the firm, the quality control procedures which are there, how do we improve that? Then as a nation, how do we eventually improve the audit quality? So all these 3 are the stated objectives which are there. And toward this front is to help people to understand what are the elements which go into audit quality. What goes to say that, yes, they've done a good job, they've done a qualitative job. So what are those elements? Instead of leaving it for people to speculate what all they should consider for audit quality, this document tries to come to some consensus as a version 1.0, saying that these are some elements which, if it is there, we can assume that there is a quality. So that's the first objective which is there. And second is to encourage key stakeholders to engage with the various constituents as to how we can improve audit quality over time, because the excellence, as all of us know, is a journey. It's never a destination. So audit quality is also a journey. It's not a destination. So you need to have all the key stakeholders continuously engaging. Only if you know that these are 4 or 5 parameters on which we can discuss, then we all engage on those 4 or 5. That's how this document is done. And lastly, to facilitate greater dialogue between the shareholders and the auditors concerned. That's the objective of this model. Now, this is a very important slide, and I'll spend some time on this. So, how does somebody go about measuring audit quality? I can say that yes, I'm reasonably good. The work which I've done is reasonably good. I can satisfy myself. They have identified 4 elements. All these 4 we are aware. But the question is, how much are we actually implementing it? Are we aware? The answer is yes. But are we implementing it, practicing it when we are concluding our audits is what is important. And these are the only 4 critical components which are there. The first and foremost is compliance with law. So you can say that if the financial statements which have been prepared and the audit process you have followed is in compliance with the law, then you can say that yes, on quality, one important checkbox has been done. So when you say compliance with law, it includes Schedule 3, template requirements of financial statements, or the standards which are notified under law, or the company law requirements, or any governance requirements coming out of other corporate legislations. So if all of those are in compliance, then you can say that audit quality is there. So this is one key checkbox. So one of the important checkboxes to say that I have done a qualitative job is whether it is in compliance with the requirements of law. That's the first one. And if you take SEBI and all, whether you are complying with the LODR requirements in terms of the information which you gave. If you're doing an audit of a mutual fund or a REIT or an InvIT, there are other disclosures which SEBI has prescribed. Are you complying with those? If you're doing an insurance company audit, IRDA has spelled out some requirements. Are you making those disclosures? So only then you can say that yes, I have done a quality job. So first checkbox is compliance with the requirements of law. The second is compliance with a firm's quality control process. So we discussed earlier that every firm needs to have a quality control manual. So for you to say that I have done a quality audit, what is important is, am I complying with my own firm's quality control process? My firm has prescribed a particular quality control process of how do I identify an engagement team, how do I identify reviewers, how do interaction happen between engagement team and the reviewers, and what are the skill sets which are required, how the working papers have to be compiled, where they have to be stored, what is the turnaround times or timelines within which it has been. So my firm has its own quality control procedures. Have I followed with those quality control procedures? So if I am consistently following with my quality control procedures of the firm, then you can have a second checkbox saying that yes, quality is good. So once I have done everything which I am supposed to do, then you can say that yes, I have done a quality job. So beyond that something can go wrong, but at least whatever I have defined, have I followed the same. So that second checkbox is a critical checkbox. The third checkbox is on appropriate reporting. Appropriate reporting. Whether the report which you are giving is appropriate for the work which has been done. I'll give some experience of mine, and that is largely in the context of PSU audits. I don't find it much in private sector, but in PSU audits, my experience. Somebody else can have a different experience. Normally what happens in these audits is, PSUs are 30 years old, 50 years old, different ages, different complexities, different locations, management changes at the top, and then it has its own set of complexities. Now, in these PSU audits, sometimes suddenly a fear sets in. CAG will haul me up. If tomorrow, if I am hauled up, my next CAG appointment may not come. Now I am rotating out. So if I am leaving something next firm, so many things go in the mind. So it's extremely common to see, very, very common to see that emphasis of matters are not required, but auditors will still give. Other matter is not required, but they will give. Qualified opinion is not required, but they'll still give. Disclaimer not required, they'll still give it. These are very, very common. In fact, I used to think why would somebody do, but there is this, sometimes it is understanding gap also. Sometimes it's understanding gap also. So if you take a standard like SA 705, it so beautifully gives. In fact, there's a small, very small, neat box which says that what circumstances qualified, what circumstances disclaimer, what circumstances adverse needs to be given. And but many people tend to panic. Where emphasis of matter is enough, they would go and qualify the same. It is not required. And I have enormous conversation where people keep asking, sir, I want to qualify, I'm still scared, or I want to do. You don't require to do it. You don't require to do it. But those cases, whether the reporting is appropriate. Vice versa is also there. I'm supposed to qualify, but I gave a clean report. I'm supposed to disclaim, but I gave only a qualified report. Those cases are also there, but the other cases are also very disturbing. So it's not like showing excess profits is good. Showing low profits is also bad. Excess profits reporting is bad. Showing losses is also report. Under-reporting is also bad. Both are bad. Similarly, here also the same logic applies. Just because you give over-conservative a qualified report when it's not required, or vice versa. Both are not to be done. So if, whether as a firm, are you giving the right kind of report? That's the third checklist of audit quality. Similarly, if you look at SA 701, my own view, I'm subject to correction or having a different view. If you look at SA 701, my view, it's a beautiful standard and a very powerful tool in the hands of the auditors. But in SA 701, which requires reporting of key audit matters, many accounting firms take approach of checkbox. That IT company gave 7. I also give 7. Copy paste, I'll also give 7. First of all, their 7 itself was not required. Key is supposed to be key. Key audit matters are supposed to be key audit matters. But people normally, everything, if they feel little shaky also, they do it. Managements are also happy with it. As management, key audit matter, I am also happy about it, because for me in key audit matter, what happens is, auditor is telling this is key. Auditor himself is telling that I perform these procedures. Auditor himself concludes that everything is fine. So, what is greater satisfaction to a management than that? So,
but the same fees.
Printing charges. So, but the point is appropriate. The point is important. Place reports are supposed to be relevant. People should know that yes, this is a report. They are highlighting only what is really just come to my attention. So appropriateness of reporting is again a hallmark of a good quality audit. So that's the third key element which has been identified. The last one is on ethical team behavior. How ethical the team has been behaving as far as the audit is concerned. And on ethical team behavior, particularly around independence, etc. It's very important. In fact, on ethical team behavior, I'll give some examples which I have seen during my initial days of my articleship or my initial days of my work and all. And typically, even if you look at, generally if you look at your audit team, let's say I'm the partner and my team is working on the audit manager, a few people and things like that. As a partner, if I go and meet the CXO team, I just come, I go directly there, socialize, get back. Here's a social event next week, I go there. The audit team is observing all of these things. So when the audit team observes all these things, their ability to highlight some issues to the audit partner, human nature, we call that example of 2 children which I told. Human nature, it comes very naturally, it comes. Or you sugarcoat it before you tell your senior partner concern. You'll be very careful before you tell, because out of 10 observations you bring, 7 may actually be irrelevant. The partner will tell, for your experience, good, but 7 are irrelevant. That's generally what will happen, because at that age, based on your experience, you feel 10 are great. But the audit partner knows the 3 are important, let's drop it. And over experience, you will realize that yes, what partner did is correct. But for you to take that also, how you conduct the team. The SQC1 has beautiful paragraphs on this part. How do you handle that part is very important. That ethical team behavior, how the audit managers conduct themselves, how they're handling the team members, are they coercing the team members, forcing the team members, all of that. In fact, in SQC1 there are requirements like if you're making your team members to work extended periods and creating fatigue and all, their output will get affected. So all of those behavior, if you're able to ensure that, that is a fourth checkbox. So these are four key checkboxes or elements. So if all these four are there, then you can safely look back and say, yes, I think I've done a quality job. So it doesn't mean there won't be any gaps left out, but at least I can say I've done my best. I think these are four elements which have been identified and they're so beautifully explained in this document, AQMM. Now, weaknesses during audit, peer reviews over a period of time, audit documentation inadequate, all of this we are all familiar. These are very common weaknesses which are there. MRL not taken, written communication. Maybe I'll just spend a minute or two on these things. I think all are important. I'll read out, but maybe on two things I'll explain it. And these are things all of us connect. All of us connect within our firm and in the ecosystem. One is audit documentation not being there. We are all pretty clear on that. Then no practice or quality review manual. Some people have it more as checkbox but not updated. Third is management representation letter not taken. But my view is people take management representation letters but they are ineffective. I'll give you this example. My experience is many cases, particularly reasonable size audits, people collect management representation letters thinking that it protects them. They think MRL is an insurance for tomorrow if something goes wrong. Management told, I relied, I went on it. No. As far as MRL is concerned, that MRL becomes an insurance document for you only if there is an evidence, that you have validated the contents of MRL. So if they have given 7 pages of 12 observations, I should validate whether those 12 observations which they are telling is correct or not. First I have to do that. So I cannot accept it at face value. So the standard requires me to satisfy myself that what they are telling is correct. So MRL doesn't mean I blindly follow what they say. So if I am not satisfied with what they have told, then I have to change my procedures. So that's the first requirement. So there should be evidence in your working papers. There should be evidence in your working papers that I have validated the contents of MRL. Second is, there should be evidence that I relied on the MRL in forming the opinion. So in forming the final opinion, I relied on the MRL. Like for example, the useful life of asset or the usage pattern of the asset. So I should have relied on that for me to say that yes, this is how I satisfied myself. So there should be evidence of that. Only if those two are there, MRL is effective. If the working papers don't give evidence of that, that MRL is trash. It doesn't help you anything. The next is communication with those charged with governance. And I would encourage that the audit standards, many of us normally listed companies, audit committee, we go and make a presentation and all, something is there. But if you look at unlisted companies and all, more often than not, the interaction with the board or audit committee is little minimal. You give a report, etc., but it's little minimal. But your work requires you to have that communication. So you have to have that communication, and communication is complete only when you get the understanding that other person has understood it in the manner in which you have wanted to be understood. It's not complete when you type it and keep it in your file. It is complete only when you are satisfied that the other person has understood what I am trying to tell him. That is communication. So recall, contract act, communication, etc. It is complete only when the other person has understood it and there is consensus at item. You have to have that. So he may disagree with what you told, but you should understand what I have told for him to disagree, no? So first I have to do that. So that communication with those charged with governance is very, very important. So that again, many cases you will not find it. And I would strongly encourage that slowly, particularly unlisted company, 300 crore, 500 crore, slowly encourage them in their interest to have good formal meetings. It takes half an hour maximum. It doesn't take more than that. Some 10-12 slides on independence, this, that, and things like that. It helps the whole process. So that's on. And then technical standards not followed. We saw the list of various things. So this is key items listed down in the AQMM document. Now, version 1.0, it seeks to do 3 things. To whom all it should apply. So they said themselves 3 things. To whom all this document should apply. Next slide I'll tell you. Second is they have identified some questions or indicators around 3 areas. They have identified 3 areas. One is on practice management operations. Second is on human resources. Third is on strategy. So they developed a set of questions for each of these 3 segments, given some scoring and all. And depending on the scoring, you are level 1, 2, 3, 4. Level 1 means you are nascent. You are still finding your feet. Level 4 means you are fairly mature firm. So 4 levels have been spelled out. And for this, questions have been done under these 3 categories. All 3 categories together have marks of 600 marks. 600 marks are there. And in each of the 3 categories, you should cross minimum of the marks. So if 2 segments I cross 50, but third one I cross 25, I'll still be level 1 only. So I have to cross all the 3. I have to cross all the 3 hurdles. Only then I go to level 2, 3, 4 and things like that, which I'll articulate. And laying down the methodology for deriving audit quality status. Now, so this is mandatory from April 23 for those firms who are doing audit of listed companies, banks, and insurance companies. Banks and insurance companies globally, even unlisted, are considered as public interest entities because they deal with public money. Who are not covered is branch audits are not covered. So they're specifically scoped out the same. Otherwise, even if you have one single listed company audit, the firm becomes applicable. And we are all witnessing now number of listed companies coming up, and you'll actually see more IPOs in the next 4-5 years, including the small medium exchange. That platform is also gaining more kind of acceptance. And apart from this, there could also be a potential exchange for startup ecosystem for capital to get shifted from one holder to the other. So these are all things which are, yes.
Is this applicable even for branch or division of?
No, it's for the firm as a whole.
Public listed entity. You are doing only one of the division
No,
of.
it's only for the parent. Center. Who is signing the financial statements. So that's how the applicability has been set. So for all these 3 categories. And if we are looking at building audit practice, it's a matter of time before all of us get exposed to some listed company or a subsidiary of a listed company somewhere. All of this will eventually come. And they are making this part of the peer review process because the way the scoring is done for the 600 marks, the 3 categories, it is based on a self-evaluation. It's based on a self-evaluation. I myself complied. Yeah, sorry.
What about unlisted companies whose capital is above?
No, that's not there. Only for India. Here they are not done, fortunately. So it's only for this category. But my view is, any firm who is serious in audit practice should try to follow this. I'm not saying that this is a great document, but definitely it helps you to improve the focus on the quality. And as I told you at the start, it's version 1.0. But if you have decided that I want to do audit, this definitely is a good document for partners to sit and see how are we performing on these metrics. If we personally believe 10 questions are relevant, ignore them. But I'm sure majority questions you will be quite eye-opening to tell that yes, yeah, I need to do this, I need to take an action on this. That way, it's really helpful document. So even if you're unlisted, I would encourage that you should try to follow this within the firm. Then, it's now being, because this audit quality maturity model is more a self-evaluation document. You evaluate yourself. The firm evaluates itself. Just to ensure that you evaluate it properly, it is now incorporated as part of the peer review questionnaire. So peer review questionnaire includes review of this AQMM one. So whenever the next peer review cycle comes, they will review these questions also. But let us assume for a moment my peer review was done in 2022, next will come in 25, but I want to check myself whether I've done it properly. You are at liberty to call the institute to appoint somebody to do a peer review for compliance of this. Your next cycle will come 25 and get regularized, but in the interim, the institute is obliged, if you request, institute is obliged to enable a peer reviewer to come and see whether your AQMM, whatever compliance is there or not. So that peer review mechanism has been put here. What is important to note is, whatever rating you get, level 1, 2, 3, 4, you are prohibited. You are prohibited from disclosing directly, indirectly, discreetly, anywhere. You can't put it letterhead, visiting card, or tell your clients orally, or in PPTs, or come here and tell in my profile that I'm part of a level 1 or level 4 firm. That is prohibited. So you are not allowed to disclose whether you are level 2, 3, 4. You are prohibited from doing it. There's a mechanism where it gets captured at the institute, but otherwise, none of your communications, directly or indirectly, you should not say, I am level 2, level 3, level 4. You are prohibited from doing the same. Now, these are, I'll just run through 3 slides and then conclude.
Just, can you go back?
Please. Yeah, sure.
The second paragraph contains institute and post. What
Yeah.
does that mean?
No, it actually becomes part of the institute when the forms and whatever you have, membership forms and all. In that forms it will be there.
Firm profile.
It will be there. So it's not like public can come and see.
Firm profile.
And the firm profile or wherever it is. But let me tell you, that is the correct thinking. If it changes, don't ask me. Because there are people who are pushing for that, because they believe that by publishing, people will now try to get there. But my view, this is not like your ISO or CMMI. It's not that kind of a matured questionnaire. I think maybe 5-10 years later we should think, but these are very early days, very early days. In fact, I'm personally against even putting it in the institute form. I'm personally not aligned to that, because somebody can still take a screenshot. The misuse is still possible. Yeah. So coming to these 3 sections which are there, section 1, 2, 3. There are 3 sections. There are a whole lot of questions and sub questions. This is like our CARO report. You know, CARO, somebody will tell there are only 20 questions. No, it's not 20 questions. It's actually 60, 70 questions, because there are sub questions and all. Here also there are lot of sub questions which are there for each of these. But broadly on operations, on practice management operations, the total score for this is about 280 marks out of 600. Majority weightage is for this. And the questions come under the category of what are the practice areas of the firm. Here it says that if more than half your income is from audit services, then you get a higher score. If your income from other services is more, then you get a lower score. So the idea is you decide that I'm an audit focused firm depending on what is my area of practice. So like that, they defined questions which are there. 2 questions I'll highlight. One which is there in bold or whatever color it is. Out of the 280 marks, heavy weightage is for 2 things. Quality control, second is on technology adoption. So most of the questions come on that. So how strong is your quality control process and compliance with the same? Second is on how much of technology the organization is embraced for performing the audit. How much of technology you have adopted. So out of 280, 144 marks goes there. The rest of it are distributed across other things. Like for example, revenue budgeting pricing. Like for example, all of us as partners, every year at the beginning, 1st April when I go to office, I say that this year I should keep a track of all the time spent by all the staff, how many hours or multiple episodes. We all start with that aspiration. But by 4th April it's over because we took it on a wrong day, April 1st. So, but otherwise, that particular part, what it says is, if you have a good way of measuring your revenue, how you arrived at your pricing, budgeting of ours, you get some score. Because that actually helps your quality. That actually helps your quality because what gets measured gets monitored and you can improve your quality. So like that they are putting some questions around that. Then on human resource, then on human resource management, it's about 240 marks. Out of 240 marks, majority of the marks is for resource turnover and compensation management, attrition and compensation management. The questions are around that. So here the questions are around resource planning and monitoring. So what is my process of so much audits for this year, so much growth, how I have planned my resources. That working paper should be there in the firm. So if it is there, so many marks, not there, 0 marks. So like that we have employee training and development. What is the training and development? You have, most of us every Saturday we have our own L&D practices which we have put in our firm. So if that is there, if the answer is yes, you get 8 marks, not there, 0 marks. Approximately. I don't know 8 or 4, I don't know, but I'm telling you, like that it is defined. Now on resource turnover and compensation management has the highest weightage because for the profession, we all know attrition is a major concern. It's true for most service organizations, more so true in the case of a profession like ours because when one audit manager leaves, an audit director leaves or audit partner leaves, there's a wealth of knowledge which suddenly goes off, wealth of knowledge and experience which goes off. So for that reason, what is the firm's approach on handling attrition, how they're handling compensation, all of that. There are some questions on that based on which you get some marks for these aspects. It's about 240 total. The last area is on practice management, your strategic or functional aspects and all, about 18 marks. So out of 600, 18 marks goes for this area. And here majority of the marks are for the infrastructure, which includes geographical presence. If you have more geographical presence and the quality of infrastructure which you have, licenses which are genuine licenses, not pirated ones, all this kind of stuff. It has 48 marks. So like that questions have been evolved. Now, all the three put together is 600. The bottom part I'll briefly explain. If all the three sections, any of the sections, all the three or any of the sections, if you are below 25% in terms of scoring, out of 80 I got only 16, then I will be treated as a level 1 firm, which means a nascent firm, long way to go. Nascent firm, long way to go. Then level 2. If all the three sections I cross 25% or in any of the sections I am between 25 and 50, if I get stuck, then I will be called as level 2 firm and just begin to grow. That's the second category. The third category is level 3, above 50 to 75. In all the three sections, 75% of 280, 75% of 240 marks, 75% of 80 marks. If I cross all the three sections, if I have crossed 75%, then I will be called as a category or level 3 firm, And if I cross 75% in all the three categories, then I would be level 4. My experience, most firms who are 10 to 15 years standing will all come under level 3. They'll all generally fall under level 3. Level 4, some of them will fall. And my view, I don't think we should break our heads and push ourselves to go to level 4. Level 4 can still remain an aspirational one because it comes with some amount of investment, commitments and all that kind of stuff. Everyone may not be in a position to put in that kind of resources behind. But if you are level 3 also, I think people should be reasonably satisfied that there is some meat in the firm, some strength in the firm is what I would say. If you're level 2, it's a little inspiring that is I can get to level 3 sometime soon. Level 1, if you're a very young firm, it's fine. But after 15 years of practice, if I'm still level 1, then you need to look at your strategy as to whether at all you want to be in audit, you want to look at some other areas. So those kind of thinking, it does help. Now, like this, questions are there. I'll just for sample, I'll read out a couple of questions because it's a long list of questions. I'll leave this slide deck behind. And it's a long list of questions, but it's part of the institute website also. Like for example, if your revenue from audit is more than half the total income, then you get 4 marks, otherwise you get 0 marks. So that's how the scoring pattern is there. Similarly, does the firm have a mission and mission statement? So do you have you defined for your firm statement of purpose and what you want to achieve? If you have defined that, you get 4, otherwise you get 0. So some of these are drawn in the sense of helping a firm to stay focused. Like for example, if somebody has a mission statement which says, we want to be an audit provider of high quality. So we all want to be, but you have it as a statement and you put it in 5 walls, run it as a screensaver. It just keeps prompting people. It keeps reminding people, yeah, it is there, So it also helps training and things like that. So from that perspective, so somebody might ask, how does it help quality? Does it help quality at least remotely? Answer is yes. So it does have a sense. So like that, they defined this question. This is the second question. Presence of audit manuals, you get 8 points. If you don't have audit manuals, you get 0. If you have templates of letter of engagement, KYC, if you have templates which the audit teams can use a standardized validated template, then you get so much marks, otherwise you get 0. So like that, all of these questions have been defined. So all these questions have been defined on that particular metric across all of this. I think technology. So technology adoption, internal communication, what kind of security practices you have, using tools like MS Teams, all of the stuff. Automation of their attendance system, project activity timesheet management. These are all specific questions which are there. So if you have a timesheet management process, you get 4 marks. Otherwise, you get 0. So they've defined those kind of sub questions which have been done. So it all adds to your score that way. So these are all things. Many of them are reasonably easy to do. To get to level 3, it doesn't take too much effort. Level 4, it does take a bit of effort. That's similarly on the human resource management as well. Then on the audit practice management infrastructure which you have and things like that. So that's so this is the concluding part of the document, where the document gives a guidance on how firms should go about. Reasonably commonsensical. What it says is first do a benchmarking of where you are, and then take steps for developing an action plan. For example, in some questions, if my scoring is less, develop an action plan saying that within 6 months we'll cover this. So and so partner, so and so manager is responsible. So you develop a document, have a review mechanism. So it gives a little bit of a process document of how you can progress on your maturity curve over a period of time. So this is the last part of the document which is there. So with this, let me conclude and leave the floor open for interaction, and we can conclude. Many senior members are also here, so feel free. If I am not responding, they will be available for giving guidance.
Was it talking about only statutory audits or like 3 listed items?
Statutory, completely assurance plans.
No
Statutory.
other internal audit or any other stuff. So this gives a sense that only big firms can kind of no,
Not necessarily. My view, any firms who are doing 1 or 2 listed company audits or central statutory audit of bank, typically they will be 15-20 years standing. And 15-20 years standing, if you don't have this at the minimum, it's very unlikely they will be able to do a qualitative job. It will maybe become highly person dependent. Maybe because he is doing, it is there. In his absence, can the firm do the same job? It will not be there. So it's from the timing. My view, the best part of this document is the 4 elements which I told you. I think that's been very beautifully drafted.
It should be process based.
Yes. Yeah.
This technological adoption also include audit tools.
Yes, yes, it includes that as well. Just 2 slides, maybe I'll read out all the questions because it's 80 marks out of the total. Yeah. So it is, one is internal communication, office attendance and leave management, time management, digital storage of records, easy retrieval and all that kind of stuff, a centralized server or a cloud, digital library for all the knowledge resources, client interaction, the way you send alerts and all that kind of communication which you do. Then video conferencing facilities. Do they use only a licensed operating system? Own email domains and usage policies. And use of antivirus systems, data security, cyber security measures. Sorry. And then they have this question around awareness and adoption of technology for service delivery. Usage of your audit tools, analytical tools, data visualization tools, all of that. It has about 12 points. In fact, a very high score which is okay.
Some of the points are firm level. Are there any some of the points
All of them are
specific to the assignment level?
No, all of these are form level.
Firm level.
Form level. I tell you the history how it started actually. All form level.
As far as the documentation is concerned, we are talking about the documentation in many meetings, is there any assistance? What is really the documentation to be maintained, especially from the audit point of view? Anywhere in the websites or any of the institutes or any guidance, somewhere it is available, because many places audit people, they simply take a lot of printouts and then file it, maybe credit.
It doesn't help. No, that doesn't help.
Yeah, that is what I'm telling
It doesn't
you.
help.
So simply take a credit ledger and print out this, take a printout, that take a printout, and so you build up a file. So what is that should go into the documentation when we say about an audit? Is there any help is available somewhere?
Broadly, few things. One is areas of estimates and judgments.
Okay, that's I think morning you discussed.
Okay, so that's one. Second is regarding the audit procedures which you have followed and the basis in which you have arrived at your conclusions.
Okay.
Third is with reference to your assertions when you are making on certain things, like for example the bank statement, the BRS which is there.
Okay.
Similarly, your GST
Should I
reconciliation.
keep say like with reference to every accounting standard, should I keep writing something there?
Not necessary. It's not necessary. It is for your own internal thing. So many of us would like to have that, let's say, depreciation schedule. I would like to give reference to the standard on depreciation, that particular paragraph. So normally these tools which are published, which are available in the market, they themselves give guidance, go to India 16, so and so paragraph 3247. So they give a reference more for ease of helping people to draw reference. But it's not necessary that my working paper should spell out that particular paragraph number. That's not.
Sir, for receivables and payables.
Receivables and payables, you don't require the list of receivables and payables, but you require evidence regarding the process you have followed to satisfy yourself on accuracy and completeness of the receivables and payables, and for receivables, the process of what you have followed for impairment testing and the quantum of provision which you are making. So how you have arrived at the quantum of provisioning, that evidence you should keep it.
Can I
Yes,
add to
this
point?
yeah.
Maybe 505 where they say external confirmation.
External confirmation.
Sir, in most of the cases, external confirmations are not available.
No, perfectly fine.
Management is not
No, it's perfectly fine. Only it will not come. It will not come. You yourself will not give. Okay. No, I'll tell. I will not give. Okay,
Sir,
let
I
me put
am
it.
qualifying in my
No,
CPD.
I will not give, sir. I am telling you. I am not giving.
Sir, but why is
I mean-
that hesitation?
I'll tell you why the hesitation. Hesitation is because between the seller and the buyer, the way the accounting has been done, you really don't know how the accounting has been done at the other end. I have control on mine. I don't have control of the other person. I'll give you my company for example. For most of, we do what we call annuity services. So for the month of April, May, June, I've raised my invoice on March 15th. It's already gone. I've raised it. So in my receivable it is reflected. But that fellow will not account on 31st March. He'll account it only in the April, May, June. So when that statement, he doesn't want to give that number. Second is, all these relationships, there is a payment. Now people treat it as confirmation of balance. So what happens is, the ecosystem today, if the other customer has confirmed it, then what will you go do next? I'll go till next day, confirm it, I have a cost. That's the next thing. So they don't want to do it as a process. The only case where we oblige is this M&A transactions, NCLT, NOC, those cases, goodwill gesture, all of us, ecosystem, we support. But now with all this GST coming, and Also our 26 years availability which is there. I think you have indirect ways of confirming the same. So it's making life more qualitative for the preparer also, and thereby for the auditors also. So it's getting better there. Once the matching becomes mandatory or whatever, then we get there. As a country, are we progressing in that direction? Answer is yes. We'll get there. See, what we should understand is every economy has a maturity curve. While we have 3 trillion, whatever, fourth largest, all that kind of stuff, I don't think we are in the same maturity curve of a 6th largest GDP or a 7th largest GDP European country, because they evolved much faster, higher per capita income, payment receipts, process are all quite different. So here it's still not there. But are we getting there? Answer is yes. Will it happen in my lifetime? May not know. In your lifetime, 100%.
Sir, what is your advice on end user funds?
End user funds, actually, it is possible. It is possible. It is possible.
Sir, CC account is there.
What?
CC, cash credit.
Yeah.
So 100 crores will be charged. So huge payments are there.
Yeah.
So somewhere invoices are kept, only voucher is writing in the company. You ask for voucher, it is somewhere in the factory. Sir, most of the answers are like that only, sir. See, sir, it is happening, sir, now. So,
Sir,
voucher they are right.
See if it is material.
Yeah, sir, if it's a 50 crore audit, 100 crore audit, you take that risk. If it's a 1,000 crore, don't take that risk. That's all I can tell you. No, 1,000 crore in that entity is small, it's a smaller company, sir. But there probably you have to go.
So, there is specific questioning.
If I were you, what I would do is, I'll go and do a 9-month audit up to December. No, honestly, I'll do a 9-month audit up to December, finish it off. Maybe Jan, Feb, March, I'll do a sample sitting here. So it gets covered next year. So if I process and satisfied for 9 months, it's fine. If I'm not satisfied, then Jan, Feb, March also I'll put a percent. It adds to my cost, not managed by fee. That's a different part.
For the firm level, when you see, the results may be different. When you see the assignment level, the results could be different. When you go for a review and you say that the assignment level, the values are different, and you are further clarifications and queries. They may say that you look at it at the firm level, sir, why are you looking at the assignment? But your assignment is your assignment of going there is a QRB.
See, the firm level quality ultimately helps you to do better assignment. Okay? It cannot become vice versa. If firm level quality is good, it has to help assignment level. At assignment level, if there is a compromise happening, then that which means your quality control process is not able to catch that process. So that's how you need to see.
Maybe say 10 assignments are there, you see 7 assignments they are good.
Yeah.
They may give only yes and then provide.
Either assignment cover also.
Only.
So my view that will come. That's why I told you what is important worldwide is audit quality indicators, which is auditor auditing.
One of those 6-7 indicators usually is also available there.
Yes, sir. Website. Not in institute website. Generally, it's there. Audit quality indicators. I'll tell you the name of the firm. Among the firms, I found that to be good.
Sir, do we need to keep all confirmations from banks for bank balance?
Yes, sir.
Yes. Statement balance.
Yes. And people after that earlier Satyam experience, they go and see the screen themselves. Some of the banks, they go and come.
All certificates.
Because print out
Sir, and to answer his point on requirement of audit documentation, he might as well refer to the peer review formats published by the institute.
Okay, I have not seen it.
It actually throws some light on that.
Peer review documentation requirements.
It throws some light on what are the basic documents that you need to maintain as part of audit.
Institute website.
Yes.
Oh, okay.
There is a whole lot of samples of it.
Oh, okay. Thank you.
But I am not in. Good, sir. Thank you all. It was a pleasure interacting with all of you. Early lunch, surprises but good. Have a nice lunch, and I think post-lunch is the actual meat of the day. So Jomon is here, so we can start early. Maybe we can start at 1:30, I think.
Yeah,
Some
yeah.
work was.
Thank you so much.
1:30. So thank you all.
Thank you.
Will take us through auditing standards. Are we doing it right? It's my privilege to introduce you, sir. CA Jomon K George, a fellow member of our institute with 31 years of diversified practice experience. He was the chairman of Southern India Regional Council for the period 2019-20. During his chairmanship, SARC bagged the best performing regional council award. And he has also successfully conducted the 51st regional conference of SARC-FICA at Lulu Convention Center, Ernakulam, in which 2,500 plus chartered accountants participated. During his tenure as chairman, he never missed to address our GMCS students and motivate them to become a successful chartered accountant. He is the founder and managing partner of JVR and Associates, an 8 partner firm specializing in corporate audits and consultancy. Mentor Philip Macmillan Woods, a multidisciplinary accounting and consulting firm based at Dubai. He is also the faculty for auditing at the Institute of Chartered Accountants of India, and so far he has taught more than 10,000 chartered accountant students. He is a regular resource person on professional circuit on accounting and auditing standards and corporate audit, has done more than 900 presentations. He is also a peer review trainer. He was the member of Auditing and Assurance Standard Board of ICI. He was the chairman of ICI Ernakulam branch in the year 2002-2003. He was travelled extensively in the UK, Middle East and the Far East. He was the former president of Rotary Cochin Central and member of various social clubs, honorable treasurer of Regional Sports Centre Cochin. He was the secretary of Kerala Management Association. He is the member of advisory board St. Teresa's College, Ernakulam. Authored book Trials, Pin Pathakal, Reflections of Personal and Professional Life, released in February 2021. He is also a corporate trainer, columnist and panelist. His mother was an English professor and his father was working with the Cochin shipyard. He is also a cost accountant. He is happily married to Bindu. His son Ryan is studying law now and daughter Leah working with the information technology field. With this brief, I have great pleasure in presenting before you CA Jomon K George, a learned personality, to handle today's session. Before I hand over the podium to sir, may I now request Surya Ramani to come forward and present him with a shawl, health bouquet and a memento as a token of our love and affection. A big round of applause for Jomon K George. Thank you, Surya Ramani. Over to Jomon K George.
I had a speaker saying that in afternoon sessions, you are at liberty to sleep and also to snore. But the only request is not snore very loud, disturb the person sleeping next to you. Not just sitting next to you. But I am sure that those who have stayed back is in the spirit of learning. And as MPV said, whether it's meat of the day or not, this topic is of great current relevance. And we are standing at the threshold of the next audit season. This time, happy news is that many of us are getting bank audits allotted. The polling had become frozen, and now we are slowly getting back the bank audit. So the season would start probably from end of March itself to get ready with larger branch audits, and then moving on to listed companies, those who are ready, and then goes on and on for till December or whatever time, then the tax filing. So the morning session, AQMM, as you have experienced, MPV, and it's always a disadvantage to speak after MPV. And he has covered that in a very, very lucid fashion. The best way of presenting AQMM. But you have noticed that it is applicable for the time being to the auditors of listed entities and central statutory audits of banks and insurance companies. But here is a case, what we are going to discuss this afternoon is that this is applicable for everyone. I was once asked,
Why the feedback?
Okay, right. And was asked to do a presentation on standards and auditing applicable for SMPs, small and medium practitioners. What's your take on that caption? It's a misnomer. Because it's not whether you are an SMP or not, It is what kind of audit is there and what is the service that you are entering is what we should do. So I said this has to be corrected. And then standards noting, the continuing relevance of it. I'm happy that I'm back in Chennai. Chennai is second home for me. I did my articles here, way back 88 to 91. And I started classes here. And then from 2012, I was elected as a regional council member. Served the region council in 9 years. And 2019-20, I was fortunate to serve the region as its chairman. Thanks to all my colleagues who have put me there. And it was a great experience, to sit in the chairman's cabin where you have attended classes way back in 88, 89 and all that. I did my articles with the firm called Verma & Verma in the office used to be on Gaturu Road. Now they're shifted to Kanya. So traveling from the airport, memories of traveling on your second-hand Bajaj chair scooter in the scorching heat of Chennai is quite exciting. And I'm staying in Ranjit. My room is overlooking the institute, so it's a great feeling. And this was where my father again was introduced to cost accounting. The general manager of finance of Cochin Shipyard, he used to come to Chennai for the member audit board as an IOC member for the CNJ comments, because that being a central government entity. So all pleasant memories of Chennai and Chennai's homecoming. Thank you in absentia. Thanks Chairman Geeta and the chief for having me here again. So the question is, are we doing it right? Yesterday evening I did a presentation for the Palakkad branch, and that was for, are we doing it right in the wake of peer review and back audit? Of course we'll cover on that's very important. We'll get topical right away. The applicability of standards and auditing. When you go to a small branch, for example, Palakkad, it's a small branch where you expect only maybe 50, maximum 50 is a good number, turnout. That makes the chairman very happy. 50 members, good. So for this topic, I was expecting a larger crowd, not because I need an audience, but because of such great importance. It will unfold, it will become clearer as we go by, as our slides, we move through our slides. Whenever there is expression of opinion, standards and auditing will apply. So Palakkad people tend to say that standards and auditing is for Reliance, Infosys, and Jomon, who often comes and speaks in a suit. It's not. What about non-corporate tax audits? Are we expressing an opinion? Yes. Form 3CD is an expression of opinion. So standards and auditing have equal applicability to non-corporate tax audits of a trader which you are doing in corporate or somewhere, and to that much as applied to a Reliance or Infosys or DCs. This is the basic understanding. This is where I expected Brahmaya Hall to have a capacity growth. And even for AQMM by OP, we have surprised. The members post-COVID are slightly reluctant to come to meetings. Then I think we should start getting together in larger numbers. Deliberate on all these topics very important.
We had a bank seminar full of hall yesterday, probably.
Yeah, Bank audit seminar also.
The number.
Now, bank audit also, now the crowd is reduced because they wait for whether getting a bank audit or not. Otherwise, it's value for money.
All was almost full yesterday.
Well,
That is why probably the number is reduced.
I'll take, probably get a photograph of that and put it on my yes, in my DP, saying there's a huge crowd following. That's it. So non-corporate tax audit is applicable, and also bank audit branch as well as central statutory audit is applicable. I got a WhatsApp message from a senior member who was a partner of a firm which has been doing central statutory banks for at least 15 years. Just 1 week back. Jomon, one doubt. Are standards and auditing applicable for central statutory audit of banks? I was shocked. That's the level of awareness. And what is happening? All these things we are talking about, and we can relate it to many of the places, AQMM. I don't call it audit quality maturity model. I would like to call it audit quality maturity metrics. That's where it is presented. The 4 things which are being highlighted, and the rank, the 600 marks and the rank thereof. So this is very, very important to have this understanding. We just quickly dwell upon the history and evolution of standards and auditing. It was in 1982 that the institute set up the APC, Auditing Practices Committee. This is just history for young members, seniors would remember. And they used to issue what is known as, it's okay?
Yes.
Okay. And to make matters worse, I have a phone also. So APC was set up, which was issuing statement on standard auditing practices. In 2002, The board was renamed as AASB, and we started calling them AAS, Auditing and Assurance Standards. 3 days I was in Vizag to do a presentation. I was surprised that they're still using the term, the Auditing and Assurance Standards. That is gone. From 2008, we use a completely new terminology. Auditing and Assurance Standards is not there anymore. And I was fortunate to serve the board AASB in 2005-06. When Manohar sir became VP, he handpicked me and co-opted me to the Auditing and Assurance Standards board, and I attended all the 12 meetings, 11 in Delhi and 1 in Mumbai. And in the work which is going in, the deliberations of 2-day deliberations which AASB does, is so very detailed, and it is sad that having served there, for so many years back, the level of compliance is still very poor. The FRRB reports that the compliance levels are dismally poor. That's the term they've used. So this is how it is, and in 2008, in the result, the new preface, we have 2 standards broadly classified into SQCs and engagement standards. I have SQCs is standards on quality control. What is AQMM all about? AQMM. So I think this should have preceded, or I think it's a sequel to what FBB has done in the morning. How do we bring about audit quality? Ask this question. When we discuss SQC, I always ask this question. I've been teaching auditing for 20 long years and taught more than, as they introduced, more than 10,000 CSP. So ask this question, how do you bring quality into an audit? How do we bring about audit quality? Those, you remember, we buy a emergency lamp. Behind that there's a round sticker. What is written there?
QC.
QC passed. Am I right? QC passed. So key question is, can we put such a stamp on the auditor's report and the balance sheet? That is what this session is all about. And that's what the morning session was more about. For larger firms, they should go to the next level of maturity and say that I'm category, MBB was saying that don't be too aspirational to fall into category 4. Why not? Nobody can apply brakes on your dreams. I firmly believe that you should not let anyone apply brakes on your dreams. And be with people who accelerate. That has been the thinking all the time, ever since I qualified in '92. So quality control, quality is about 2 things. One is processes. 2 is people. P and P. But people now, there's a frown on the face. There are no people around. The new scheme of education, the students come only after both groups of intermediate, and we get them only for 2 years. That is slightly unthoughtfully done according to me. We should move the council to have a rethink on that. At least first class commerce graduates, that's my personal feeling. Commerce graduates should be allowed a lateral entry. Otherwise, the catchment students is substantially less. And they stay with us only for 2 years. Of course, there's no leave in between. I hope you're familiar with the new scheme. There are only 1 day leave in a month, only 24 months. All the advanced ITT and MCS all have to occur. So effectively, it is 703 days is towards some 580 days. So 120 days difference is only there. It's a tabulation they have done. But still, it puts us, 3 years is 3 years in the day. That is all. But then, with the people we have, there's not a requirement for in-house training. Ours is a student-centric firm. In our Cochin office, we have about 50 articles, and 27th, just sharing a personal, not boasting anybody. We are going to have 1-day induction program. For the newly last 6 months, we have picked up 6 students, and for the 16 of them, we are going to have 1-day induction program. In a good 3-star hotel, 3-star, 4-star, in a good ambience, that's what I want to say. I would talk about some introductory aspects of the conformance of JBA culture, an audit partner about the audit aspects, the compliance partner about company law, FEMA, all those things, introduction, another partner on internal audits and technology, and another partner on GST. This will be followed by half a day session on Excel and technology and a motivational session. Maybe in a week's time from then, after we close down for the year-end holidays and Easter and all. This in-house training is so very important. And people say that these are not expensive. We don't call it an expenditure.
It's an investment.
It's an investment. Right? Thank you for putting the right word into it. We have to do that. And there's also a need for verticalization. We'll come to that a little later. So only having good processes. What are the processes? That is what MBA will discuss in the morning. That there is a mission or a quality statement embedded in every one of the audit team, from the senior most partner to the junior most student. There's an embedded quality culture, a DNA, as part of our DNA, that we will do all the audits in compliance with standards on audit. That is the process part of it. It's not just a statement that has to be implemented. It cannot be a policy alone. A policy has to be implemented clearly down the line. For that you need training, you need supervision, spend substantial time on a junior team of members for that. Then the right people, having a motivated, charged up, instructed, supervised, reviewed kind of people with a lot of focus. Are mobile phones allowed in your office, the students? It's not allowed in our office. The student joins. When she enters, he enters, he has to put in a tray in the reception silent mode. They can take that for the lunch break and not for the tea break, for morning tea break. It has brought in substantially better focus and productivity. Are you gutsy enough to do that? Please do it if you're not doing it. A lot of time is wasted on, Vada, Chumada, and all this. And there are trolls. I was completely anti-social media. When I was SRC chairman, I didn't have WhatsApp. I started using it out of compulsion. When I came to KMA, I had to use that. But now it is eating away a lot of my time. I heard Chetan Bhagat talking in Chichu. My son received an award from him. He was saying that if your screen time is more than 3 hours for the youngsters, he said, we are the people who have crossed the bridge. My screen time is 4 to 5 hours. That's what Chetan Bhagat said. For the students, he's talking about +2 pass students are getting into their chosen stream of education, could be law, it could be chartered accountancy, medicine, whatever. So this is a killing time, and therefore, that really requires processes. Human resource management, we are getting marks for that, isn't it?
Yes.
In the AQMM, when we go to the next level. So all these are processes. Your attendance has to be, you can use technology and then RFID and all that, attendance and daily reporting. Everything is online. You're slowly getting rid of paper as much as possible. That is all. But at the end of the day, we still believe in some paper. So, preface issued, and sorry, we went back one side. So,
Sir, but the clients will be calling, right, sir?
That's it.
Clients have to call the office.
I'll tell you something. That's a very question which comes up everywhere. No, it's not obeying me. Back ಹೋದಲ್ಲ
Back to
So the clients, we have 3 common phones, which are kept in the, we can say that the central portion of the office. Individually, they cannot call the students. You try this out, you will save a lot of.
I've started it now.
You started now. Congrats, all the best. So we are not anti-student. If you are anti-student, we will not get. We have an academic culture. We firmly believe that we have an academic culture in our office. So we a long queue, I can probably say, boast a little bit saying that long queue every time after every results we have. Now as the culture, there's an academic culture, there's a fun culture also. We can't be those strict, this thing and all that. So academic culture is, of course, giving them a lenient schedule, a 5-day week, a decent stipend, much more than what the institute prescribes. Leave, human considerations, all those things. Good working environment. And AC is not a luxury anymore. Chennai particularly. But Cochin is hotter than Chennai. Kerala this time recorded very high temperature. One day it was, India's highest was 37 at that point of time. It was in Gananur, in the northern part of Kerala. We have brands there. Not to say from the point. So I hope I have answered the question. That or they can call on the land phone. Land phone is hardly used by anyone. So we have one out of the, and then again this OGP issue comes. OGP also, if you are allotting that to the student phone, it is dangerous. So we have the common office phone.
So office mobile phone.
Office mobile phone. Yeah.
It works that way because it takes a bit of time for the clients also to understand that it's no longer the individual person who's in charge, but there's an office official phone. So we have kind of brought it into the, the replying, the auto reply of in our mail system also. So that you have a number for the mobile number also, a WhatsApp number. So they call that number. So that becomes a better communication to the client.
You are right. I think this topic is slowly changing from SA to office management. But it's good. You come and stand here. Happy. We are on the same page. Thank you so much. So in my Rotary Club on architecture, you are too cruel not to allow students mobile. I said that's okay. That will be called cruel. But then it is only from 9:30 to 5:30. No habitual late sitting. And lunchtime you should see the way they rush to catch the phone. This is like a hungry person is not eaten for 3 days rushing for food. That's okay. That's fine. Anyway. So I am also now getting more of getting addicted to screen time. That should reduce. So sorry, are we still here? Engagement standards are divided into standard sorting. Mostly we are going to discuss this. Standards and review engagements. Some of you would have done quarterly limited review, quarterly limited review, and if it's debt instrument listed, it is half yearly review, limited review. That is for the limited purpose of that SR is. SAE is assurance engagements. Assurance engagements other than audits. All the certifications, all those things will come in. SAE 3400. Interestingly, maybe you will not have heard of it much. SAE 3400 is about examination of prospective financial information. Examination of prospective financial, what does that mean? I'll come to that a little later. SRS is standards on related services. I'll give you one example, 4410. Somebody said 4410? SRS 4410 is engagements to combine financial. Engagements to combine financial institutions. I was discussing this example in Parkard yesterday. A client is coming to you, what's your name? You have the client is coming, you are in practice? No, you're not in practice. Okay, you're in industry.
Yeah, I'm career break.
Oh, get restart.
Yeah.
Get rebooted and started. So these inputs will be useful at home. So somebody is coming to you, a partnership firm with the turnover of 90 lakhs and the net profit of 10 lakhs. Is coming to you, saying that, sir, I want to file my tax return. I want you to prepare a financial statement. And he is not just giving a trial balance, he is sending the tally data. So data is flying around now. We talk about data integrity. The client's accountant sends it to even to the ID of the student who did the audit last year. She would have completed articles and gone. But we have to maintain the oath of confidentiality, that is there. So we have the data, we have the stock, we have the stock statement. Based on that, you prepare the financial statements. And then you do the statement of total income, the profit as per P&L account. Say this is a tax due, the tax is paid, and the return is filed. Do you have to sign any of these papers? Can I have some response afternoon?
Yes.
Compilation engagement.
Do we have to sign? Not at all. I want a definite emphatic no from everyone. But then we do sign, isn't it?
Yes.
We sign
It's
only
still
if the
signed
client
as-
wants, otherwise we don't sign.
No, the client cannot want. That's what I'm saying. I'm coming to that, sir. So some people are like, how can I go home without signing some document? That's what every applicant
He
thinks.
will insist that you have prepared it, please sign it and give it to me. Otherwise I can't
What for?
do it.
No law requires.
That is
No,
only
It's a
for-
different issue, but he will
Compared
say.
That is what we should fight for. I am in the practice 31 years.
Agreed.
But I have done it with so much of success. I am not the senior most in Gucci. But a lot of things I have done. I can very confidently say that. So what is about that doesn't require, but the whole thing will change actually. Probably sir wanted to say that. Here's a case where he wants to take a loan and goes to the bank.
Exactly. That is why.
The branch manager was God.
Yeah.
Okay.
Yes.
He is above Supreme Court. He is above ICA. He is above NAFRA. But he will take a transfer and go. Let me tell you. There before in Vizag we had a general manager of a Union Bank having about 600 branches under him. He rose from the position of a steno to the GM, but he spoke very sensibly. I told him, sir, ICA is trying to sensitize IBA, Bankers Association, to stop this ugly practice of the managers insisting on the auditor signing provisional financial statements and projected financial statements. How can you do that? My friend said, you know what, sir? My friend said, sir, I'll give you, provided you are the bank manager, sir, I'll give you projected financial statement, but if you certify my bank balance as on 31st March 26. It's as weird as that for us too. So, examination of prospective financial information, say 3400 tells us, if at all you want to associate your name with prospective financial information or projected financial statement, say 3400, what it says, we have reviewed the business plan prepared by the client. We ourselves prepare. So no. Yes. I will say that. Then nothing has come to our notice to believe that the projections will not be achieved, etc., etc. It's basically washing your hands. That's only very good. The charter accounts who sign project reports. Projected financial statement. All the banker wants is a seal and a signature. Isn't it? We call it chapa in Malayalam. Some spread blue ink and some signature. No, many of them are still not. Unfortunately, many of the bankers are still not aware of UDIT, but many of them use that also. After you issue you didn't know, maybe
They check
within
it.
24 hours you see that it has been searched by Federal Bank or someone. So there is an express prohibition on signing provisional financial statements and protected financial statements. SA 3400 tells us on prospective financial information. SRS 4410 is engagements to compare financial information. So if you are not signing, we are signing, we stopped signing it long back. This is a place where even 44 KDA, that's why I said 90 lakhs and 10 lakhs of profit does not come. So I've seen chartered accountants preparing statement of totaling of the client on their letterhead. It's very dangerous. The mantra for the future and for the present is own up only what you really need to. Disown to the extent possible. And the client is always a detached attachment we are taking. What I say? Detached attachment. You cannot take all the problems of a client. Why is that many chartered accountants are having health problems in middle age? Those who are not into smoking or drinking or any bad habits. It's a work stress. I can speak for hours and hours. Question where many of the chartered accountants have had, heart problems, ulcers, lot of health problems. Primarily because they take all the stress of the client. I, for one, have not taken any client stress in my 31 years of practice. It's primarily the client's problem. We are responsible, we support, but we don't have sleepless nights for the client. He sleeps well. The client goes to the club, the accountant goes to the bar. That's the only difference in Kerala. And you are burning inside. Tomorrow there's an appeal hearing, what's going to happen? If you are putting your inputs, you're given the right advice, timely service, what is the worry about? Let's not start from the point, so that's something which is very important. So coming back, SRS says this, so we should not be signing. But SRS says, compilation engagement, if you have to sign, how do you sign? Normally, how do you sign an audited balance sheet? As per our report of event date attached, or as per separate report attached. Here the signing is refer compilation report. And the standard is given format of a compilation report. You know how it is captioned as? Accountant's report on unaudited financials. Even the term auditor's fees cannot be used. Please follow this. Tomorrow we can be taken to task for a very small, this is negligence and yielding too much to the client. When I was sitting here in 1920 as the chairman of the Southern region, we used to have disciplinary hearings coming here. People who have been taken to disciplinary action or disciplinary action initiated for or silly reasons, not communicating with the previous auditor, ensuring that his fees is not paid. These kind of small mistakes come back. In Central Travancore, in a small town, a friend of mine called up. He was scared. He said, "Jomon, I have a problem. I have an inquiry. I have a disciplinary proceeding initiated." A large NBFC there was a search and seizure, and somehow ED was also involved. He was the auditor of two of the small subsidiaries of these NBFCs in his town. Two small subsidiaries, two private, which was taken so casually, so passively, and he was asked all these questions. What is a question, a disciplinary proceeding or an AFRA or a MCA if you are taken to task? AFRA is really flexing its muscles. I come to that a little later. Of course, for the time being, it's only in the list of skills. Only one question, very impersonal question they'll ask you. Have you done the audit properly? Have you done the audit properly? And how to do the audit properly is what we are going to discuss now. As that, I just introduction, got into the SS, SA 3400, the SRS 4410 are two very important standards I thought. History and revolution we have seen. Now am I going back? Yes. Oh, go more. Yeah, now I'm going. Why comply with standards auditing? To expedite audits in accordance with gaps, utilize resources effectively. Resources is the time, the people we have, the resources like in the sense of the knowledge we have, expertise. Guide, direct and supervise assistance properly. To ensure quality control, the sticker we should be able to put on the auditor's report and the balance sheet. The round sticker, QC passed. To disprove charges of negligence. Today there are class action suits. India is still not too litigative on this aspect of audit failures. But in the West, all the big four firms are facing multi-million-dollar, lawsuits. I may get out of it, but on issues of negligence. And what happened in IL and FS, in the NAFRA report. I'll come to that in the right point of time. And to face and pass peer review. Anybody here was passed peer review? Has also peer review certificate? Okay, of course, research firm I know. To face and pass peer review is not easy. If you have a genuine, serious peer reviewer, we will ask all that questions which are relevant to make sure that there is good quality in that particular. Or rather that the processes, the audit process of a firm have attained the required level of maturity. That's what AQMM is all about. Again, we talk about process maturity everywhere. So I am a peer review trainer enlisted by AISB, and when I go to peer review, any peer reviewers here? Peer review, we're doing peer review? Senior. So it is reasonably lucrative now, but I ask the peer reviewers one question, very candid question, which many of them do not like because they're senior members. I'm also senior, this is only L'Oreal, okay? Everybody has a practice. Qualified in 92 from Chennai. Okay. So
is it real or low?
Yeah?
Is it real or unreal?
L'Oreal.
I know.
It's a model.
L'Oreal.
So earlier they used to thank God in Godrej. But we have upgraded the brand from Godrej to L'Oreal. That's it. That's why we change. Okay. So there's a friend of mine who was only 1 year senior to me. So he was taking charge as a chairman of the Kottayam brand. So he said, he's all white and I'm grey hair. So he said, Jomon was my junior, etc. I said, Josie is only 1 year senior to me. He is like this because he is refusing to die. I'm like this because I'm dying every month. And sometimes every week.
Sir, I say the other way. If I die, I'm moving.
If I die, I'm not. Good, that's what I understand. Well said. So peer review is not. So I ask the peer reviewer this very candid question. Do you think you will pass peer review? You know, the best test for a good peer reviewer is that his firm. He should pass the exam, only then he can preach. I firmly believe that one should preach only what he practices. That's one philosophy for life and for the profession. So that's how it is. Now the peer review schedules, I hope you are aware. I'm sure as a firm they have done. Now this is a deadline they have already, this is again under review. Statutory or firms that are statutory or doing audit of unlisted public companies having paid up capital not less than 500 crore or turnover of not less than 1,000 crores, deposits not less than 500 crores as of 31st March of the previous year, or firms with 5 partners or more. So, irrespective of the volume of business of your clients, if you have 5 partners or more, you should apply to the peer review board and get your peer review done before 36/2024. You can't wait for the peer review board to handpick you. You are supposed to inform the peer review board we are falling under this slot of peer review and we have to be peer reviewed. So happy that some of you are noting down. I have no issues sharing the slide deck here. With the SASI, they can make it close to. Or I will share my mail ID also. The second one is not quantified. Statute of entities who raised equity from the public, which means that probably the small listed companies like SME listing and all that, raise issues from the public or take a loan from banks or financial institutions during their under review. But they don't quantify any amount. So if you have a small overdraft, apparently, I think this will be reviewed. It's apparently a mistake according to me. That if you have a small, am I blocking these slides? No. Okay. No. Not for yourself, from this angle. So then it is 31st December 2024 and firms conducting branch audit to public sector banks or firms having 3 or more partners rendering assurance services, it's 1/4/22. So some people said only if partners are mobile, disintegrate the firm. Like when audit train was mandatory, people said we will go back to manual accounting, then having audit train fees. So peer review was something, and most importantly, sirs, look at this. Sorry. Companies Act 2013 is now 11 years old. 11 years old. And still not a settled piece of legislation. We are still having company law committee. You know what are they doing with the Companies Act? Decriminalizing the Companies Act 2013. Because India is shining. A lot of global investors looking at India very positively. Thanks to the good positive policy measures we are doing, there is likely stability of the government. I'm not getting political here. So if the budget speech of Madam Nirmala Sitharaman, what is evident was the confidence of continuity. So political stability, I'm not telling political at all, political stability is something the world would look over, make sure that there's policy continuity. So with that, India is still a shining spot in an otherwise gloomy world. How much is the return which mutual funds are giving today, annualized? 45-50%. So how can FIS, in fact, Warren Buffett famously said, that is more 10 years back, I realized that I am late coming into India. He felt that you have come in India much earlier. Warren Buffett is very, very candid. And he was talking about derivatives. I do not understand them. I don't deal in derivatives. I do not understand them because they are weapons of mass financial destruction. Something called WMD, weapons of mass destruction. So he said weapons of mass financial destruction. So that's a different story altogether. So here, so therefore the Companies Act has to be made, all the draconian provisions have to be got rid of, and the Companies Act should be made investor friendly. What are we talking about now? The key point everywhere is of doing business and reducing cost of compliance. You remember in the early days of Companies Act 2013, MGT 14, those were practicing company law. Even for the managing director going to the washroom for a leak, you have to file MGT 14. Is it not? That is the extent it is. That has all been reduced now. It is being decriminalized. Company law committee is working on it. So ease of doing business is quite important. Well, I hope you know that India's ranking has gone up by 42 points. I mean, 42 countries we went ahead for two reasons. One is GST. One nation, one market, one tax. Subsuming about 10, 11 indirect taxes into one, slowly stabilizing the collections around 1.7 billion a month. Then there's IBC. The corporate resolution process by coming into existence of the IBC. How many of you are young members? How many of you are IPs? Anybody?
IP, not practicing.
IP but not practicing. Please do so. Young members will take up.
The problem is you can't have two legs. One in audit and other like this. In fact, it should be more concentrated in either one. Otherwise, it will be very difficult.
No, that's a dedicated field.
Absolutely. I have a partner of mine who is an IP doing assignments also.
Only IPC.
But he's not an audit partner. He's again a compliance partner. So now that's taking a substantial amount of his time. You have added one assistant. Well, don't forgo for this reason. You can't probably should add a partner. I'll come to that in a minute. So instead of doing business, or IBC has taken this rank up. This is general information, but this is very useful. So even with this 11 years of this being mandatory under the Companies Act, accounting standards mandatory. Accounting are mandatory under 133. Even in the erstwhile 56 Act, under section 211, 3A, 3B, 3C, accounting standards were made mandatory. And what was the institute and its members crying and cribbing on? We are making standards, but it lacks statutory teeth. Till Companies Act was amended in 1999. 56 Act was amended in 1999. That's an old story for young members. With 2013 Act, both accounting standards under 133 and auditing standards under 143 have strong statutory teeth. But we are walking in a way that this teeth will come back and bite us. We are crying for it. When it's made mandatory under the Act, we are not complying. And who is to comply with accounting standards in the first place? Accounting standards. Management. Naturally, they say there's a new term, so they're called preparers of financial statements. Preparers of financial statements. New coinage has happened. Now, batsman has changed to batter. Why? Because women's cricket have picked up. So instead of calling a batsman and a batswoman, they say batter.
No, not like that. Bowler is there, fielder is there. So they brought in batter.
Different ways of interpreting. I like to concur with you. Let us make love, not war. Okay. Now, the peer review schedule we have seen, so we will back. This is a shameful remark since the closed group of chartered accountants. This is what Intelli Srinivas, the MCS secretary, before he retired, he made a statement in a press meet. We do not expect the auditors to see a needle in a haystack. You know what a haystack is? The young members know. Go to the villages. We give the hay and stacked up onto a tree or a stump and keep it for the cows to be fed in the road. I've traveled extremely. I've traveled in close to places like Bellary in Karnataka. You know, the sunset, the views are exactly like Malgudi days. Deep villages have traveled. They will see all this haystack. So find a needle in a haystack is so very difficult. You have to do deep drives, deep drills. But they should actually see the elephant in the room. And this elephant in the room has been, after this statement, making rounds in the social media. In the editorial page of Business Line, it was making rounds. It's a shame for the profession. And not without reason. Not without reason. Many audit failures. ILRFS. What's happened to Byju's, a Kerala grown company? The valuation has been 99% valuation has been squeezed. different story altogether. But it says that the governance system of the country is failing. That casts a bad shadow on the country as a whole and also the profession of accountants who have done the audits. Fees received for a 7-year course has been taken as income in the first year itself. Here in SIRC accounts, we do in a 31st March, we do the slicing. It's 8 months course, only 2 months have expired by 31st March. The 6 months is fees received in advance as a current liability we show. Those basics were violated. Now coming back to this point, IL&FS were 92,000 crores of irregularities audited by Deloitte. It's on public domain. A partner might once ask, why do you want to call the name out? Now, Big Four is quite in the news. NAFRA has studied the processes and come out with a white paper saying that these guys lack on these many aspects. Then they're coming to the next level. It could be a Grant Thornton, it could be an S&T, whatever. At some point of time, maybe come to our level of mid-sized firms as well. So, this is something which, and there, when we come to audit evidence, we'll discuss. Please remind me what NAFRA said. 305-page report. For the crux of the standard, the report is only just 2 lines. I'll come back to it. But quickly, before we go into specific standards, these are some good audit processes we work to live with seniors. I've been doing all this. This may sound very elementary, or I would say even rudimentary, but opening balance checking, internal control evaluation, and communicating, those start with governance. Maybe we said that, no? Not communicating with TCW.
Yes.
Vouching sounds very old-fashioned, isn't it? If you, instead of voucher, if you say that examination of the source documents, how does that sound? A voucher is rightly named as EDP as source document. So examination of the source documents, you must do. Ledger analysis. Is there a ledger? Now what happens is over a period of time, audits have been reduced to a mere compilation. Mid-sized clients, I'm not talking, if talks about MC, mid-size is 400 crores, 500 crores. I'm talking about clients with 5 crores of turnover and probably a capital of 50 lakhs. Majority of our clients, maybe Chennai is different, but in Kerala overall, we have listed companies as well. But then, listed companies, all listed companies, capital of 6 crores is there. In earlier days, Mumbai, the threshold limit was only 3 crores. Mumbai Stock Exchange. Now it is 20 crores, I think, for NSE as well as BSE. Yeah, so, where did I start from? So, ledger analysis, vouching, and ledger analysis. So, data is sent across, and you ask the student, what is the progress of the audit? In Malayalam, they say, statements are touched. Statements are touched. So, that is audit. Of course, we have to help them, even in the listed space, with due respect to our friends in the industry. They think that, they run the accounting. In early days, we used to say, their job is over and the trial balance is tallied. Youngsters should know that we used to wonder, how can a trial balance tally? Today you wonder, how can a trial balance?
Not tally.
Times have changed. 6 months of my articles I'm working on huge ledgers like this, developed a lot of muscles, huge ledgers like this, or timber industries in India, and timber traders in Kerala, and ledgers with this thing. And they used to have the Malayali system of accounting, the daybook system, some of you would remember.
Yes.
Daybook is a combination of cash book, bank book, purchase, sales and journal. So other than cash, all the entries have 2 sides as posted. Cash will have, so the cash balance will be taken out of the daybook system, all those things. 88 November was my first attempt. So 87 September I started.
Sir, you mentioned about this ICA accounting of, let's say 8 months fees is received, and they are accounting the entire receipt as in the same year itself. Instead of postponing it, I mean, just booking for 2 months and then that should be shown as an advance receipt for the next 8 months, 6 months. So one of our trust, what is doing is whatever CSR donations they are getting. Let's say they are getting 10 lakhs rupees and they are able to spend only 2 lakhs rupees. So the entire 10 lakhs rupees they are showing it as on the liability side as a grant. Then 2 lakhs rupees they are able to spend. So this 2 lakhs rupees only they are showing as an income. Then 2 lakhs rupees they are showing as an expense. That's it. So this 8 lakhs rupees is being shown in the revenue grant and the liability side. So is that method of
from a trust point of view, the spending for the same financial year is not very important. If you look at 135.5 and 135.6, which deals with CSR, it is on the corporate to spend within there are ongoing projects and other than ongoing projects. Day before yesterday, incidentally, as a trustee of our Rotary Club's service trust, we received a check of small amount of 6 lakhs from a corporate which wanted to discharge their CSR obligation through contributing to our trust, which is MCR registered, or CSR1, CSR. So once you receive that, you can show it as your receipts. It's not subject to tax. I hope it is tax exempt. It's not. It's 12 registered, right?
Yeah.
So we can show it as income and the expenditure will come. So there is no strict matching required.
Yeah.
So you are saying that you are showing it that as a grant receipt.
Grant received, the CSR donation they are showing it as a grant amount.
Okay.
And then to the extent of the expenditure incurred, they are showing it as an income.
Okay,
Balance
so
they are
that's
still
it.
keeping it
But
in
I
the
think
liability
now
side.
the revised way, the way the trust tax reporting goes on.
It's a resistant payment account, it is not an income and expense.
That is true, but if you're going to, but they have to still draw the income and expenditure account. And the balance sheet has to be provided.
For the purpose of this 85%.
And they are
right?
very clear now. The moment they have received an amount in the P&L account.
This is a receipt.
It's a receipt.
85% to be
If
spent.
you have not spent it, they are not allowing it, they are charging 30% tax on it.
No. There is a, you can carry forward, you can carry
Yes,
forward.
yes. All those
Form
190s you have to
10,
comply
yes.
with.
You have the Form 10
5 years.
major thing to use.
Yes.
You have to
So
file
it
that
cannot
within
be,
1 month of file, before 1 month of filing of your tax returns.
it cannot be a balance sheet.
At the end of the day, what happens is any discussion of chartered accounts ends up in tax. So we'll cut the tax now for the time being. When I take accounting standards, people ask, what is this question, sir? How do we deal with the tax? I say, Baba, when you discuss tax audit, I'm not going to discuss accounting standards. So it's a valid point. I think my point is, when you receive the amount, and then it's not spent in the hands of the trust, that still would be an income
Yes.
to be spent in the future. That will remain in your bank account. And on that also, this 85% clause will apply. That is not there, it will be taxed. That's the understanding on the tax act. From accounting point of view,
No, but
what he said is there are some faults in what he said because of the amount received is spent only so much. So if you go back to the original holy concept of the divine concept of matching, then only to the extent spent you are showing it in your income and expenditure account.
There is no
The rest you are showing it as a grant. Debatable. Can
It's
permission?
debatable.
Debatable. All tough questions we will defer towards the end. And we'll have achieved it. No, jokes apart. For me, it looks like this is the way we're going to do it. Entire receipts should be shown.
Sir, like what Madam told
Sir,
now, even the
I tell you
ICA
about the
way of
accounting
accounting.
standard. For a trust, for doing things, accounting standard may not apply unless it's a commercial.
Commercial.
Yes.
And therefore, you don't have to really know.
No, sir, it's not just accounting standards. What if accounting standards were not there? There's something called good accounting practices. That also.
Cash basis also there.
That is
therefore
also,
it is,
that
so
was my first
That
answer.
way,
But just because a trust which is not into commercial operations, the accounting standard does not apply. We cannot have, weird treatments. That's the only point I make. I agree with you. Okay, now moving on. We have seen this. Are we going right now? Yes. Audit process, yeah. Ledger analysis has to be done. Verification of assets and liabilities. Verification, inventory verification, how many of us do? Inventory verification separates offshoot standard 501. I'll share with you one simple example. During the COVID time, I got a call from a friend of mine. He had a company called Hybrid Coatings, which is now taken over and amalgamated into Indigo Paints. It's a listed company. Indigo Paints everyone knows, right? Dhoni and the Zebra. And Chennai guy should be sad that Dhoni has given up his skippership to Muthuaj. Is that? K-Quad. They say that commercials will go up because Dhoni is not as a captain. That's what yesterday happened during the business line. Youngsters should regularly read a business daily, okay? I'm getting very instructional here. I was teaching for 20 years, so I say I'm a CA by profession but teacher by passion. That runs in my blood also. I was introduced.
So one small thing. So I'm not going to reduce the importance. The opening balance verification is anyway there in the auditing standards.
Yes, SF test. Initial engagement. We're coming to discuss.
Initial engagement.
Initial engagement particularly.
Initial engagement is there, but as a process, as a second.
Definitely.
Initial engagement it is there. Sir.
No, initial engagement, SF item is initial engagements, opening balances,
Yes.
where they say that you have to be extremely careful when you're new to the client.
Agreed.
Even when the client is with us, there is no rotation. A small, medium-sized private limited company is with you for 10 years.
Agreed, sir.
Opening balance checking is very important.
It's very important. No, that's why I'm telling you. I'm not going to reduce that importance. But where it is there, to see every year.
That's
Because as a matter of thing, we do. But I just wanted to see where it is.
No, they have highlighted only in the case of initial engagement. Sir is taking a policy. When there is no standard, I do whatever I want.
No, I'm not taking the standard. That's why I already given a caveat,
That's okay. Yeah, fine. No, it's okay. Absolutely. Questions are welcome, and that makes it going interesting. Okay. Like, I never thought there will be so much of interaction. But keeps me happy and energized. Thank you so much. Okay. Now, verification and comparing financial statements with books of accounts. You have a signed trial balance. It may sound again old-fashioned, but at least a digitally signed final trial balance. This is data is already with you. It's not authenticated. See, I think we must have. What prevents us from having that? The client will find it difficult. MD is traveling all the time. It's all their problems. And we also said, no, that you have to. Yielding to the client too much is a problem. Accounting standard compliance. How many accounting standards? I'm not talking about Ind AS. Ind AS is in a slightly higher sphere of companies. How many accounting standards are there now? Any idea? Okay. Are questions okay? It's actually 29 minus 2. The 30, 31, 32 were not enacted. Inaction standards. It's up to the 29, from out of which 2 have been withdrawn. AS 8 was withdrawn long back, I think in 2003 or so. In 2020, depreciation was withdrawn. That's what MPV was about to say standard on depreciation, and he changed to paragraphs. So AS 6 is now not with AS 10. Property, plant and equipment. Paragraph 14 to 60 of AS 10 now deals with depreciation. So we can't say 27 standards because they have not been renumbered. Good that they are not renumbered. Otherwise we will have a problem numbering it again. Now I can say AS 1 is code of accounting policy, AS 2 valuation 3, cash flow 4, this thing 5, 6. 6 is gone, 7 contracts. Like that we can go on. The people academics are forced to learn. I always believe that teaching is learning. So every session you need to prepare for some time. So verification of assets and liabilities, yes. We are gone already, so you're coming back. Schedule 3 compliance information for notes. So Schedule 3, why Schedule 3 is painful, isn't it? For a small company to dissect and give so much of details. And the revised Schedule 3, 21-22 was the year of change. I did a lot of presentations across the region, online presentations as well. I said 21-22, my first slide was not a copy-paste year. Our work has become so mechanical, isn't it?
No, not a copy-paste transition from 2021 to 2022.
Absolutely, that's what. Also Caro. Caro 2020 was phenomenal change, huge changes. A student was asked to take a printout of the auditor's report. The boss said you change the year by advance the year by 1 year. So here Companies Act 2014 was born. So mechanical it has become. So therefore Schedule 3 compliance information for notes we have to collect sensibly. All those things we have to get it done. Let me ask you this question. Okay, medium-sized clients so far. Medium-sized clients. When all these changes in Schedule 3 was made, how many of us send an email to the clients saying that there are so many of additional important requirements and you will ready with such information?
We said so. We also asked them to prepare an financial statement based on this, based on as on December with 80.
Great. But how many of you put them? How many of them
Not
put?
many.
Well, not many.
The major, I think the major.
Because they are not at all aware. I'll tell you, we did an adverse coming to that.
No, we gave training on each of the notes, what it is, why it is. Then ask them to, when they are drawing down the accounts itself, they have to classify it differently.
So I'll tell you, it's practically, I'm talking about not AQMM, this is quite the reality which you're facing in question of Chennai. Chennai is a metro state. We talk about a client with a 3 crore turnover, a limited company. They may not even have a chartered accountant. They may be having an MCOM. How is he going to prepare that? But then the final preparation we will do, but the input for that at least he should do.
It has to come
like
from
for example, aging analysis.
Aging.
Now if you have the right software, the aging will do. Now we have how many columns? 6 columns. Earlier we are happy, more than 6 months, less than 6 months. Now unbilled. 0 to 3 months, 3 to 6 months, 6 months, 1 year. Same with trade payables also. Aging has become the key thing, no? Aging of capital work in progress. Aging of intangibles under development.
Yes.
Capital work in progress is quite relevant and also expected date of completion. Intangibles under development, what's happening? If you have the sphere of startups, we have started a new vertical, startup advisory in Cochin. sphere of startups, what happens is 2-3 techies come together and they work on something called what are you doing? We are developing an app. In light vein, somebody said Bangalore is a city where techies travel 2 hours in the morning, 2 hours in the afternoon, evening to develop an app on how to deliver vegetables in 15 minutes. Now Bangalore is facing a huge water crisis, because Sun City earlier. Now this was predicted. The water belt has gone down, so you have to dig 2,000 feet to get some water in a ball. Things have changed. So where did we stray from? On the so this possibility is there. So at least that input for the final preparation of financial statements. And the revised Schedule 3 and CARO 2020, if you see, is been made all amendments were made from a banker's perspective. Amit Chopra sir was involved. That's what I was taught. He's a banker, senior bank auditor, past president. I'm not finding fault with him all. But then it's from a banker's side, not without reason. What is going to the banker's audited financial statements, most of the time they feel that it's junk. It has non-existent inventories running into crores and crores of rupees. So which again disturbs the health of the banking system. There are receivables in your balance sheet which will never be received. It could be a loan taken by a director, it's not disclosed. Related party transaction says 18 is not compliant with. So on the story goes. So therefore you said you give the maximum details as possible for a banker. Are the quarterly returns filed with the banker? Agreement with the books of accounts. How did you report? Tough. So information analytical review is that we take the final figures and set rounding. Comparing with the previous year, analysis, trend analysis, ratio analysis. Ratio analysis is now easy because we have it handy in the revised notes.
Sure.
You have anything to add?
Yes.
Feel free to ask questions.
I was just wondering, I should have noted it down because I have a peer review coming up. So for this audit process, should I have just noted down this 1, 2, 3? But then I remember you suggested you give your mail ID.
Absolutely no problem. Yeah. No, noting down is good. In fact, the best way of getting out of something is noting down the phone with registers. But today, the new gen is so shy of writing. They go fast on the messaging, texting, but not on writing. CARO points informed reporting. Informed reporting, MPP said appropriate reporting. Right, I was just listening to the slides. Analytical review, CARO points. The CARO has become, very unthoughtfully drafted. Take for example the internal audit clause. Why should that be applicable for all companies? 138, section 138 says these are the companies for which internal audit is mandatory under the Act. For that, they should have confined. And they're also asking us to predict the future of the company. Based on the financial ratios, management plans whether the company has a material uncertainty that the company will go forward.
What is the toughest one?
First, prediction. Sir, I'll tell you, in light of it. The palmist, they would say, Bhudagal, that is past. Vartamana Sanskrit, and Bhavigal also. Now the auditor is asked to predict about the future of it. Actually, it's only for 1 year. So somebody in lighter vein said, sir, anyway you are changing the syllabus of chartered accounting. Please include a 20 marks paper on astrology also. Last week I was in Savera Hotel. I came for Manansa's daughter's wedding. So after lunch, there's a farmer sitting in front of the Malgudi. There's a restaurant, in Malgudi. So I just showed my hand and he said, all good things only, I'm very happy. Yeah, he said, oh, this is good, health line is good, wealth line is good, all that. So that is what they normally say. Reality is different. But I always believe that the thrill of life is the uncertainty of tomorrow. What if you know that what's going to happen 1 year from now? There's no thrill in life, there's no excitement. So that is just for the sake of it, partner also. So chartered accountants have to now learn a little bit of astrology and palmistry and all. But then, if you look at the financial ratio, I think there is a need to, that is in fact, change the approach a little bit. On going concern, on the real intrinsic health of the organization, just change a bit. Now we come back to all the standards quickly. Let's say 200. It's a takeoff standard. Overall objectives of the auditor and the conduct of an audit in accordance with standards norm. That's actually a runway. It is from that runway that we take off to various standards. The concept of evidence, the standard in very brief terms says that the auditor should collect dash evidence. Louder. Sufficient and is not there. Sufficient appropriate evidence. I always think why they avoided and. Sufficient appropriate. That whole concept of evidence is expounded in SA 500. SA audit has to be planned. Planning is expounded in SA 300. We'll see all the standards. We are not going to bulldogs. We will discuss that in detail. And what is the caption today? Are we doing it right? So after every standard, I have a few questions which we have to ask. It's an introspection that we have done. So what happens at the end of the session? We may, or rather we should, make a firm resolve and then admit ourselves, or say confess that we are not doing enough. From a compliance perspective of standards auditing, which are not only mandatory by the institute but also under the Companies Act 2030, 143 subsection 9. Then we say that there is a firm resolve. I need to change. If I have to change, what are the things we do? That's what we are going to discuss in the next maybe half an hour or so. The professional skepticism they have now spelled out very clearly. This is there embedded as a culture probably, taking things with a pinch of salt. But skepticism is what, I know the slides not fully readable. An attitude that those who are not readable can come forward. Okay. An attitude that includes a questioning mind being alert to conditions which may indicate possible misstatement due to error or fraud, and a critical assessment of audit evidence. Now, approaching every audit with the preconceived notion that everything is fine and all right is not good. But that is where?
Similarly, everything is bad is also
not good. But today's are the changing environment, that's what they say. Watchdog, not a blood dog. I don't know whether you read Mohan or Lavi's articles in this. Mohan is a chartered accountant from Bangalore. He writes brilliantly in the business life. All his articles I read and send a message to him. Good for no money. So Mohan had written an article on audit failures where he said the auditing profession and its members have been clinging on to the decision in Kingston Cottonmill's case delivered way back in 1872 as an insurance policy, as a shield for not doing what they're supposed to do in an audit. The decision was auditors only a watchdog and not a blackout. But this doesn't hold good anymore. The regulatory environment has changed. Expectation gap we thought will narrow down, but expectation gap has gone up as far as the public and regulator is concerned. So therefore, there's an issue. So again, Chopraji in a meeting in Delhi said, "Arey Baba, what are we talking about? Watchdog, blend down. Anyway, we are dogs, at least barking." That's what he said. That's the Hindi style of putting it. Are we barking? That's a question. And audit evidence. Now, skepticism includes being allowed to audit evidence that contradicts itself, circumstances that suggest you need audit procedures in addition to essays. Now, the question here I'm asking is, again, it's not in a very bright color. Are we skeptical enough? The one in the black border. The question we are going to, the introspection, are we skeptical enough? Asking questions, being a little doubting, doing deep drills where it's required. If not, let us do it. Peer review. Think that I'm a peer reviewer, very critical peer reviewer, well-informed peer reviewer. The next standard is essay choose life. Do we get letter of engagement? MP we discussed about the common errors in that he said not obtaining LOE is the term used, letter of engagement.
No, letter of engagement has to be obtained on the first appointment. Unless there is a change in some of the scope, or if there is a change of auditor, then till such time once the letter obtained is valid.
I think the standard talks about getting once in 3 years or so. But in 21-22, for example, when there are a lot of scope, change in scope, it had to be revised. It cannot be a document for ages together. I fully agree with you. It need not be obtained every year. Even in last year, when we said that, okay, previous year it has been obtained, so the same thing continues. Every year it need not be obtained. But the case of first assignment, but the fact is that we are fully unaware of, we're not bothered about obtaining a letter of engagement.
No, no, you are not telling, what you are telling is wrong. We are not aware there is something called a letter of engagement.
That's all. Nice. Yes. So that's why in a disciplinary proceeding, when we are taken to task, they ask this question, show me our letter of engagement. Letter of engagement. And that is what they would ask. I used to speak good Tamil when I was here. Now, since I'm not using Tamil, I'm not watching many Tamil movies. Tamil is deteriorated in college. Sorry.
No. What about branch audit of banks? How to get this here?
Branch audit from the branch management, you have to get it. We have to customize a little bit. I'll share with you. Format is there already there. This will be discussed in Vizag. And central statutory audit, I told you the senior member asking. Central statutory audit is a must. And it comes under rotation, no? After, particularly when you're doing the first time.
They are in a position to ask the management and get it.
Sorry?
There, the central statutory have to have an access to central management to get this.
Absolutely.
Because in case of branch audits,
No.
you are not even cared for.
Not even?
Cared for.
That is something which we have to change. I'm totally against
If you
that.
ask for it, they will give.
No, that is what. See, that is what. That's what I'm saying. Why are we yielding? Particularly people who are senior. Oh, the bank manager should be. We should take it seriously. Otherwise, you should stop the audit. I have done that since he raised this point. We long back, 2 years after I qualified, in '94. We're doing the branch of a remote branch in Kerala of State Bank of India. These guys were playing around. I was a young member. They wouldn't care much. We waited for the one day, and then it was still playing around. And the sub-staff will go by 10:30. He'll go buy eggs, make omelets, toast and all that, and give to all the staff members. And some of them are going to the back room smoking and all that. So second day when we went for the lunch, I kept my file wide open. Normally the working notes file you don't expose. And I put a note to be included in other items in the LFAR. The branch is apparently overstaffed. They were seen engaged in cooking and recreational activities during office hours, which resulted in inordinate delays in the completion of the audit. They kept my file open, and they delayed. We had a detailed lunch, 1.5 hours lunch, and my young guys were. I also see had a cigarette and all that. Came back. Suddenly there was an air of seriousness. Sir, what? Mango was the case. Sir, so Malayalam is not I saw. Please avoid that. I said, now listen. Maybe I'm younger than you. I'm the auditor of your branch. If you're serious about it, let me audit in 2 days, just like that. This is one thing. And we don't have to treat them as God. We are auditors, sir. Walk in with that confidence, and we are appointed as authority. That we have to change. That is where even I've been fighting with my young partners. All my partners are my students in Cochin. 4 of them, 5th one is being a partner now. We're going to be partner for, thank God willing, it is not going on. I've been telling them, why do you confine yourself to the accountants or finance manager? You are the partner, you go with your visiting card, properly attended with at least a close pen, that is why if not a Mopla, go meet the managing director, go meet the director of finance. Accountants cannot, chartered accountants cannot, audit cannot confine to the accountants. Speak from a slightly higher pedestal. That's what we should do.
Sir, I think this can be easily solved. Just hold the audit report, you will give.
Huh?
Hold the audit report.
No, that is at the end, no, sir.
Sir, still, sir, at least by the end, we need. At least hold the audit report, you will give. Definitely.
No, many of the bankers act smart. We have to really.
They are not aware. They are not aware.
No, they are playing boss. That's all. We have to assert, sir. I've done it, and of course, I'm not talking about a 31-year-old experience. I'm just talking about 2-year-old chartered accountant at that point of time. So, letter of engagement, I think this is readable now. Are you obtaining letter of engagement without fail? Format in appendix. But I have something, last year what I did was, I prepared something called audit kit. That can be shared. In fact, I had sent it by mail to all the members in South. And if you have not received it, this audit kit contains all the formats. Letter of engagement, MRL, audit program, all those things. We'll see towards it. If not, let us. That's the only way I can say. The standard is mandated. It says that, as I said, subject to those points, a letter of engagement should be obtained before we. And who initiated the LOE? Who initiated the LOE? Initiated by the auditor and countersigned by the
Auditing.
Finance or even managing that auditor. That's it. Yeah. Okay. 220 we'll skip again. That's a repetition. According to me, since we have excuses there, this should not have been there. 230. I'll start this discussion with what Mr. Aniket Talati said, the immediate past president, in the World Congress of Accountants in Mumbai. He said, in a program, large audience like this, the president does not get topical. But let me tell you, even now and going forward, one mantra is very, very important. Not documented, not done. Not documented, not done. Peer review. Sir, I've done it. There's a paper. There's no paper, not done. This happens to us also. We ask this question. Do you do physical verification? They said, sir, physical verification, month end it's a celebration. Month end 31st March, MD is very particular. And we have a party after that. Ask for a report, no report, but a big bill of the party is there.
That is the report.
That is proof that stock verification has been done. If not, for the sake of stock verification, all of them stay late.
Stock verification of whom is done?
But yeah. So nature, timing, all those things. So documentation is the question, how good is our documentation? And today documentation, seniors would remember, we would go for an outstation audit and then come back with 3 thick box files. Are those files there now? May not be 3 box files. One flat file may be there. But then most of the documentation today is digital. So since and some of you know that I contested Central Council, I could not make it. My associate chairmanship was office. So last financial year I was in office. I did many of the audits. Some of the audits I took back from my partners, which was divided between them. And as an assistant for, let me have a final roundup. Can I have the ledger scrutiny notes? Sir, at the client folder like this, sir. She and smart girl comes up and says that this there. In the client folder, LS, not folder. LS is, we call it ledger scrutiny. LS, all the key points are there. I make my comments there and we're done with it. And the exception reports, from out of which we will issue that governance. I come to that, SA 260. Communicating with those governance. And that some of them may become KA. I slightly disagree with MPV on what? KMS said that the auditors come out with this, auditors respond, the auditors approving it. Strictly not in that sense. There's interplay between, SA 701 and SA 706, we'll come to that in a minute. So, physical or digital, will it stand a test? Today, your evidence, your sampling processes, the key question today is our work defensible? Is our work defensible? Does that sound good? Do we have to defend ourselves? Absolutely yes. It's an emphatic yes to say that we need to defend our work. What is that we have done? Documentation. So defensible in a court of law before the disciplinary committee, before the NAFRA. We are not saying that every day we are going to face them. But in case, with the best practices, it could be the lot of audit risk has many components. Come to that a little later. So permanent documents and working papers. The revised standard does not talk about permanent file and current file, but it's a good practice. Documents of lasting importance, hard copies, we put it in we call it main file in our number. The other one is called working notes file. Good practice. And while at this, somebody was noting down what MPV said. ASB has come out with a wonderful audit working paper template. It's on the website of ASB. Go to the website and the resources. ASB audit working paper template. Brilliant document. 9 chapters. Patrika, Padchirika, very good. You want to add something? Very useful, is it not? From introduction, appointment, everything. 8 or 9 chapters. Brilliant document. If you can have that checklist approach on that, you're almost there. This will come from, this is originated from none other than the authority which is issuing the standards, ASB. The source is also very important. Tell you more?
Yes.
240 is about, yeah.
In that audit working paper template, there are many formats given for letters given. For instance, the issues debated, what is the status. There are certain things which are appearing to be mandatory. But whether the peer review person will demand or is it required for the practicing unit to maintain the working papers in that style in our most.
See, that is only indicative. You don't have to be exact, you can follow that, but the spirit of that, if you imbibe, then your peer review will be done fast. That's what I said, ASB and peer review, and peer review board. ASB formulates standards and expects us to comply. We are not complying enough. So the next level of policing is that, I'm going to come and do your peer review. And peer review as of now does not result in any disciplinary procedures. I always call it a friendly formalization. It's a friendly formalization.
Familiarization.
Formalization.
It is also familiarization.
But the peer reviewer.
I get the spirit of it, sir. Thank you. Awareness. He says that why do you formalize? Let us be aware. That is what he said, familiarization is form. Yes, sir.
Yeah, friendly formalizing process means the peer reviewer also reports to the
Okay.
peer review board.
Yeah.
It is in order or it is not in order.
Yeah, what happens is I purposely decided not to get involved in peer review because it is done by a junior member. She calls me sir. So I didn't want my influence to be there. So I am disappearing and interested to a partner. But the first round of findings they discuss with. They don't directly immediately report to the peer review. They discuss with us threadbare and make all the take the suggestions into place. And some during the peer review also you can do some process correction if it's a peer review.
Is it a joint declaration?
No, it's not a joint declaration. It was from the peer review. But of course, the comments go further. We have to give our response also.
I would like to add one more thing.
Please.
Even assuming the peer reviewer has observed certain deficiencies, the institute doesn't take it seriously, they advise you to correct it. So you need not be too much worried about it. Again, peer reviewer, there is a discussion. Once they make an observation, we sit across, discuss, and then the way I presented may be different from the way they wanted. So they suggest that you do like this or do like that. So it's an initial process for us to be on track.
But how many rounds of this thing? Finally, at the day, what matters is whether you get the peer review certificate or not.
That is
Get the
most
peer review
important.
certificate,
Normally they don't.
We got fail in. I haven't come across a situation where a peer
They are
review
failed.
consultant is not issuing a peer review certificate. So there has been a lot of deliberation. That's why I say initially it's very friendly. After that, sometimes again, one more
Last
thing
time,
I say,
very tough.
please pardon me being very candid. Sometimes also happens because of the ignorance of the peer review. Certain points are left out. That's why I said as a trainer ask this question, which many seniors do not like. Will you pass a test? Only then you can be a good reviewer. That's what I said. So I hope I have answered the question. And finally, the peer review certificate is referred to as a hallmark of excellence.
Yes.
Hallmark is in gold grading, they have hallmark. Hallmark of excellence. And MBB said, about AQMM you should not publicize. I'll tell you something. Branding is very important. We said that with that branding, let some work out. Why should we remain mum? Nobody talks about us. Sometimes what happens is
No, he only told don't do candid display.
I get it, I'm coming to that. So sometimes you do some good work, nobody's appreciating, even your wife is not seeing that. So you go look in the mirror and say, good job done. Like that. That's what you do. That is how we keep going. Okay, that's what. So when we got the peer review certificate for the first time, I asked my partners, what are we going to do with this? The plastic laminated thing, are we going to keep it, filed in the peer review file and say that we got it? I said, not enough. To our clients, let me ask you this question. Do you have a mailing list of your clients? Yes. And a WhatsApp group of your clients? Please do have. Send updates and communication. Could be an advance tax intimation. It could be an update on the budget. We call it antenna. We call it antenna. Say, see, communicate frequently, but not happening as frequent as I want. Again, routine works and on partner centers. So what I suggested was we send a mail to our clients. Not an advertisement in Malayalam,
Just
not that. We say, send a client, we have been recognized.
And there are people to display.
No, I am coming to that. We display.
In their office.
We display. No, we say, some people put on their peer review, there is no prohibition. On AQMM only there is a prohibition.
Yes.
Peer reviewed by ICA, some people put in the visiting card. Branding is required. Attire is branding. I would say attire is branding. Your grooming is branding. Now, Institute has come out with Skill Enhancement Board. SSCB, what is that?
Yes.
Skill Enhancement Board. Public speaking skills, communication skills, drafting skills. Very, very important. Something very close to my heart. So, MCS training when we go. I used to attend, when I was chairman here, whenever I am here, I have just most of the MCS batches. Yeah, and we did a lot of housekeeping improvement. If you can go and see the MCS room where we did as chairman and chairman's cabin also. So not straying from this particular point. SSCB, where did I stay from? We stayed from, what is it, what we are discussing?
Can you put it in our website, sir, the peer review certificate?
Yes, you can do that. I was about to say this. I said we have been recognized. That's the best subject. Dear sirs, dear sir, and what? Dear Patron, We are happy and proud to inform you that we have been granted the coveted peer review certificate by the Institute of Chartered Accountants of India, which is proof that our audit processes are comparable with the best in standards and also attained maturity. And thank you for your continued patronage. And this is framed and kept in a visible size in the reception area of our office, not outside, inside. That much branding I think we should do. Why are we not having a brochure? Why are we not having a website? Why are we so silent about thinking that all the work will come to us? And we complain that we are not able to. And why are the youngsters not doing registered value course? Why are the youngsters not doing IP course? Why am I not doing it? I'm asking myself. G. Ramaswamy, a past president from Coimbatore, he said he was watching a particular, he was candid to say that watching a particular serial, Tamil serial, as it's for 1 hour every day. And we stopped that and started doing IPC. And this IP. I can say that G. N. Manohar is my classmate. In Savera Hotel, in the first days of India, his classes were taken. Online sir, I think it was before getting purposely, he used to sit next to me and write down notes. So learning now stops. So that is where we talked about the peer review at the past. So now we come back to 240, fraud possibilities. Now, what are the indicators of fraud? One is that, look at the entire environment in which we work. The loose controls, the people around. We have remote locations where high value transactions take place. Nobody is going there. Bank accounts are not reconciled. Recently, I was engaged for a business valuation in North Kerala, in Calicut, and started discussing. So I wanted to have 22, 23 audited figures to start with. Then 23, 24, 11 months over, so 10 months over, it was Jan end. Wanted the provisional. And then from there on, I would do a projection from 24, 25. Finally, it's going to registered value, so don't think that I'm certifying that. We did give advisory on it. So 22, 23, when I started looking at it, under other current assets, there was an item. Branch bar divisions. This company has got franchisees, pages branches, 27 on branches, retail outlet. When I called him and sir, it's a senior member, I asked him, so what is this? The unreconciled balances. So what do you mean unreconciled balances? Branch divisions. Branch divisions, when they consolidate, normally get set off as that's a different story. That is unreconciled balances. And I said, it's not a loss. I can put it like that. So loss is, so what I reduced is 1.8 crores from 2.6 crores of reserves. And I started the reserves with 0.80 for 80 lakhs. I'm not certifying it. So little bit of restatement of the very badly treated financial statements. That's how things are. So we cannot have unreconciled balance to all those things. So this could be all directors' drawings, or this could be a misappropriation by an employee which they did not want to report and show. It could happen. So all these susceptible to poor internal controls. Very senior employees refusing to retire, refusing to take leave. They're scared to take leave for even for a day. Something would get, detected. So do we evaluate the possibility of fraud? 240 says that. And if you smell the rat, that's a very layman's term. If you smell the rat, yes, then we have to reframe the plan until we either confirm or dispel that that's a fraud. Frauds in inventory management, a lot of things can happen. Misappropriation of cash, bank reconciliations. In fact, a very old story. That's a very small instance when things can happen. That the company is not doing bank reconciliation for months together. Suddenly there's a difference of 30,000 rupees. It's about 15 years back. 30,000 rupees. What happened was the office boy pulled out a checkleaf and he wanted to buy a Yamaha bike, second-hand Yamaha bike. That is not a huge aspiration. He pulled out one and put the signature of the MD of a listed company. And he goes to the bank. The bank manager is more familiar with him than anybody else. Sir, good morning, sir. I was at the cash withdrawal 30,000. The bank account, it could be 30 lakhs, it could be 30 crores, the largest sphere of thing. Not the office boy, somebody at a higher price. So this is not detected because bank reconciliation was not done. But luckily before he was settled, he immediately confessed and said that, sir, 10,000 rupees is with me. I think 9,000. 21,000 for my Yamaha. I'll give my bike and 9,000 rupees back. Don't put me in jail. It's a small story, but small instances it can happen. A lot of places this is happening. Inventory So 250 is the standard which always, so the question is the auditor expected to know and ensure compliance with all the applicable laws when he is doing the audit of a particular company? The answer is no. But if it will impact on the accounting and audit function, the standard says, yes, then the auditor should be aware of that and probably take an accounting entry or a disclosure on that. That is where NOCLAR has become now very important. Again, NOCLAR is only for the listed companies, Code of Ethics. NOCLAR is non-compliance with laws and regulations. NOCLAR says that if the matter is of so much of significance or so intense that it can affect public interest or put public into jeopardy, then the auditor should not stop with the directors, shareholders, he should go to the regulator. If it's a listed company, he may have to blow the whistle loud for the SEBI to hear. If you are a banking or an NBFC, you have to loudly blow the whistle for the RBI to know. That is NOCLAR. But here in the other case, I'll give you an example. So you are a manufacturing company with a certain polluting effluents. So you have a treatment plan, but after some time you drain that drain into a nearby river. Kerala, this happens. The Periyar is so polluted. Some days it flows green, some days it flows yellow because of the effluent from the industry. There's a lot of fish and all that die. All the living the ecosystem is disturbed. Plants dry out and all that. Very toxic chemicals. So after you get a notice from the Pollution Control Board, a shock cause notice, or in February, saying that shock cause for doing all this and the effluent treatment is not up to the prescriptions of the specifications. And up to 31st month there is nothing, only the shock cause notice. The company is in the process of preparing it. I think in all fairness, it should result in a note in the form of a contingent liability. Okay, this is stage 1. The stage 2 is that by March 15, the shock cause notice was prepared, and March 15 they have levied a penalty of 50 lakhs, which either the company is admitting or the law does not allow an appellate level. You may go to the court, but as of now it's not applicable. So which means that you have to make an accounting entry.
Claims against the company not approved.
No, this is where the penalty has already been levied and you are not going on appeal, probably admitting it, then it has to go for appeal. Now the third situation, something which we do not, I think we should extend that thinking further. What if after the stop memo, after this penalty is levied, he does a stop memo? Pollution Control Board is coming and sealing out the fact and saying that you cannot carry this anymore. What happens? Going concern, SA 570 is immediately to that. We don't go to that extent. See, that is how the next level thinking has to go. Then going concern is such a huge problem. Then we have a Ind AS which is discontinued operations and non-current assets held for sale. Don't know the number it is.
105.
105. Non-current assets held for sale. The name speaks all, is it not? If operations are discontinued, then what happens? The non-current assets are also held for sale. The land, the building, the machinery, all on the block for sale. So the whole thing changes. You may go for negotiating or outstanding liabilities to the bank and go for no TS. One-time settlement and say that, sir, we are all down, COVID we finished, so please waive 2 crores. Bank agrees, yes, that you are right back in the P&L to the extent of 2 crores. The net amount will get adjusted. So that is what 250 is about.
Some more examples on NOCLAR?
NOCLAR, all the examples. Major violation of SEBI guidelines. Insider trading, as the examples I have given there. We give, very clear evidence on insider trading in this sector. And management misuse of public funds. 260 is, again, quoting MPV in the morning, is that not communicating with those chartered companies. We call it audit observations in our office, audit observations. During the course of the audit, we have these observations, like I said, ledger analysis, opening balance. Now, we have a new vertical, it's not a new vertical, we have been doing this for quite some time. I've been writing an article in a fortnightly in Malayalam. The column has captioned as corporate doctor. Corporate doctor. It is about having the proper systems and SOPs in place. So we have a series of about 9 articles, which is now coming out as a booklet separately. It's called Business Lekhanangal in Malayalam. It's business, something in business, there is no exact word for that. That is business guidance for businesses, recruiting people, accounting systems, internal controls, all those things. So this vertical, and now we started developing a called comprehensive system study and laying down of SOPs. You go to a mid-sized company, there may not be a qualified accountant, the software may not be legal, there are a lot of issues, backups may not be there. All these things we get into processes, people, add people, reduce people. We did one in Dubai about in 2012 for a hospital, and the hospital was turned around in 6 months. One, because they have good reporting systems, insurance claims locker. Second, because there was a doctor who was an expert in laparoscopy, gynecology surgery, laparoscopy, where he was generating a lot of revenues. And when the revenues were properly captured, claimed, and it was turned around. Complete 18-20 people we had to retrench. It was slightly inhuman, but they're all just a fashion parade. Mostly Filipino ladies are coming there. They're just coming at 11 o'clock and leaving at the time they wanted. We are not getting reports on time. We took out the entire accounts department and we did MIS, and my partner used to stay there for a long time and used to report to the management. Brought about a lot of value addition. So here I'm talking about communicating those channel governance, audit observations. It could cover the accounting system, the controls, the lapses in the system, statutory compliances, GST mismatches, serious, you go to the portal and unpaid long outstanding liabilities. Mismatch was 26 times. Portals all not happening. There's no internal audit. Larger companies, we should insist on the company having internal audit exercise. So we have to communicate all this in writing as observations and get the replies. If they are significant enough, what is the name? The spirit of KAM. It would become a KAM. Has anyone seen a KAM in the auditor's report? Listed company reports. It's in a tabular form. The audit matter, then the auditor's response. The idea is to say that, okay, you have come across certain significant matters, you discuss with the management front at length, and also give to them in writing, and you got a response based on which you decided not to have a qualification or an emphasis on matter. That's I said there's a interplay between KAM and KAM and EOM. There's a difference. EOM is where you have all these discussions, but you still feel that this has to be highlighted. But this is not so intense to invite a qualification. That's a softer version of a qualification. And how do we conclude an EOM paragraph? Our opinion matters, how are not qualified. So we 300 planning. In that series, that's the first standard. Ideally, that should have been after SA 200, that should have been the standard planning. Planning is, we have studied that in planning, a lot of management we have studied. Planning is looking before leaping. But two things in the audit, the standard. What does in a larger audit particularly, you should have a very clear overall audit strategy. How do we do that? At the beginning of the audit. Taking into account your previous experience. And if it's initial engagement out of extra care, after a preliminary discussion, visit to the client premises. Do we visit the client premises? Yes. You have to go familiarize. We had a shipyard audit, a service shipyard audit which came in last year. So 2 days, we had a very detailed visit. The shipyard we visited, understood the processes, discussions we had, used the accounting system, senior assistant, senior qualified assistant was put on the job. And based on that, we developed an overall audit strategy. We call it APM in our office, Audit Planning Memorandum, APM. It's a 2-pager. It's a 2-pager. And that concludes by saying, execution of the audit in total compliance with detailed audit program. So APM is the strategy document, and detailed audit plan is listed in an audit program. We still have the hard copy. It runs into about 20 pages of a mid-sized manufacturing company. It will run into 20 pages. Introductory part, appointment, all those things. Introductory part, we have a close, prepare a general note on the business of the entity.
Yes.
Very important. If your junior students without this thing is put on to that, without understanding the business, we'll do. I asked this question when I was taking classes, what is vouching all about? Or what is examination of source document all about? People say, sir, it has to be supported. It has to be authorized. The date and all that should be correct. I said, all this verification is all about relevance. Whether that particular transaction is related to the business entity, relevant and properly captured into the system. Once it's captured in the system, the whole thing, now it is like goes everywhere. Earlier manual posting was there, now it goes everywhere, it goes to the balance sheet, capital, everywhere. So the initial entry point, screening, filtration has to happen. That is the importance of source document verification. So on that we have this very, very detailed audit program. So without knowing what the relevance is, if a student is put on to vouching or verification, not be out of focus totally. That can happen. So that's very important. Do we plan an audit? Is an audit planning memorandum an audit program? Yes or no? You can write down. Is there a review during the audit? See, audit program cannot be fit all. No audit program can be fit all. So today I am doing the audit of a manufacturing company, I am doing the audit of SPIC. Tomorrow I am doing the audit of Georgia Securities or a stockbroker or an insurance company. Only the general points can be the common. Everything has to be specifically redrafted, refabricated.
One question.
Yeah.
When do you do the risk assessment? Before planning or after planning?
Through the course of it. Through the planning and even after that. Because I come to that a little later when we have audit risk in SA 315 we discussed. Very important.
In my opinion, the first risk analysis is very important, and then if we do the plan, we can plan even the number of working days even.
So that's the audit planning memorandum, that's the time frame which is discussed. This assessment happens at every level. Even at the planning initial stage, it has to happen. Based on, see, when we went for the visit, you see that the inventory controls are very big. Inventory records are not updated. No qualified person on that, no good software being used. So, suddenly you have a doubt on inventory, how they have stated, the valuation.
So the audit also will be focused on that area. We have to devote more time on that.
Absolutely. We identify the weaker areas and we give more focus on that. Rather than wasting time on routines. Very valid point. Thank you. SA 315, this is a very important standard. In fact, those who remember the old standards, this is a combination of 3 old standards. One is study and evaluation of internal control systems. Then knowledge of business. There's another standard called auditing in a computerized information system environment. All these 3, I mean, if I remember correctly, AS 6, AS 20 and AS 29 have been combined into one. Understanding the entity and its environment for the sake of identifying and assessing risk of misstatement. Now, what is audit risk? What is audit risk?
Statements.
Not finding the mistake.
Not finding the mistake.
That is a detection.
Detection. All valid points.
Detection and
compliance.
Compliance. Errors.
So those are components.
These are the two major
audit, yeah.
Of giving a wrong report.
Absolutely, that is the point. Audit risk is the risk of expressing an inappropriate opinion. In PV, what did you use that term? What opinion? Not appropriate in the given circumstances. So that's another term which was used. In the slide it was that. So I was watching, I wanted to relate every point of that because AQMM and the compliance are so very interrelated. You cannot see differently. So good that, though it was by chance, it's good that we have to do these 2 sessions.
No, this is like a warp and a weft.
Yes.
In a fabric.
Absolutely. And good to be, happy to be a co-speaker with them. Thanks. So, so risk is the risk of expressing an inappropriate opinion. Risk has many components. One is the inherent risk. Inherent risk is the risk in the absence of total control. The other one is not compliance risk, I forgot. It's control risk.
Control risk.
The risk of control failure. Detection risk is the risk that our audit procedures, our substantive procedures, fail to dig out some irregularity and ingeniously lay down fraud. We are not able to detect. That is detection risk. So compliance risk. So control risk, inherent risk, and then of course detection risk. That's it. So understanding of the entity is so very important. That's what I said. Prepare a general note on the business of the company, particularly if it's first time. Note into the main objects of the memorandum of association. There could be slight deviations. So really act is what is that they're doing. It can also happen that the housing finance company during the year has started vehicle financing also. So there's a new limb of activities, where the methodologies, the business model, the revenue model, the associated risks are all different. So you have to again reframe your understanding. Of course, you'll have to have a new limb to your audit program. All those things will happen. And knowledge of the entity, they say that 3 types of it. One is entity-specific knowledge. You're doing the audit of a particular manufacturing entity. In Kerala, we have a lot of latex glove manufacturing. So latex gloves, which became a huge spurt in their business during the COVID time. Because of that is a basic examination. There are 2 types of gloves. The routine examination gloves. The other one is much more sensitive, that is surgical gloves, which the surgeons use. So you understand about the entity-specific knowledge. Then you also have an understanding of the industry from your experience, and also Google up and you get all the information. The new mantra is God doesn't know everything, but Google knows. And everything you Google up. Then there's an understanding of the macroeconomic environment also. That's also very important. When somebody talks, like he was talking about, a student comes up with 10 points and finally the boss gets only 2 points. 8 had dropped because of the experience and the judgment comes over a period of time. And also his knowledge about what's happening in the industry, which a junior student or even a newly qualified may not concentrate.
But the 8 points dropped also, it would be prudent to make a note why it was dropped. So that the successors will know, for this reason my senior has dropped.
Yeah, it's not a blind dropping. Absolutely, I agree with you. That is essentially, in fact, we were running through a little fast audit documentation. It's very important. If there is any finding or anything that raises the eyebrows, then if you're deciding not to make it any part of your report, the reason should be properly done. Wonderful.
But there's a specific question on this in excuse.
Yeah, excuse you also.
Specific question.
On what basis did you decide not to highlight or not to qualify or not for your? Now, SA300, this is it. Therefore, deals with the auditor's responsibility to identify facets of material misstatement in financial statements to the understanding of the entity, its environment, including environment. Now, I'll tell you macroeconomic environment understanding. You're doing the audit of a real estate company. Okay. Now, there is market news. The market trend is that normally we use that term. Real estate is totally down. Sometimes people tell me that layman's term. If real estate is totally down, that understanding should essentially have a bearing on your evaluation of the inventory valuation of that particular real estate company. The inventory of real estate they have. It could be land parcels, it could be built up space. So naturally, what are we talking about? We talk about net realizable value in that terms. Strictly speaking, construction contracts, that's not applicable. But if you're a builder and you have wants inventory, then naturally, if you look at NRV perception will be substantially lower because you have macroeconomic environment says that real estate is going down. So immediately after COVID, people said that brick and mortar is over. And we have an info park in a place called Takland. It's a new Cochin. All the apartments are going to be abandoned and kids are going back to their places. All come back now. And most of these companies today have wanted the work from home is not working. Work from home now, there's also moonlighting which has happened. You know about it.
Moonlighting.
I'm sitting in front of 3 laptops. One is Infosys, one is TCS, one is Cognizant. I'm the same me. That's called moonlighting. Moonlighting one way is good. I've heard of very highly placed executives. So on 3 days a week they go for bar training. Not drinking, bar training. They want to know how to make a cocktail and so that is relaxation. Or that is they might earn some money also, but then not for the money they go. But that is in the right sense of it moonlighting. But here the facility and productivity was going down. And there are social issues, domestic violence, divorces, husband and wife sitting all the time at home, lot of issues. So I was totally against this work from home concept. Satya Nadella famously said, when Twitter said this is going to be the future of work, that everyone is going to work from here, Satya Nadella famously said this cannot be a permanent feature. Use this term. We cannot burn the social capital we built our own years. Burn the social capital. That's a brilliant term used. I had in fact made a slide with this photograph and sent across to many of my friends who are these IT addicts. I call them living vegetables, unfortunately. They no social connection. They sit at home in front of the computer and eat a burger. That is what in a lot of quick developments today, everything you get on the phone. Yesterday I got up in between and at 4 o'clock I just wanted to know where I've reached. So in earlier days we had to come down from the upper berth and see which station we have reached. Today you just 12:624 running status. You know where the train is. Somebody is working on it overnight, but I'm totally against. But the social connect is very, very, particularly for young chartered accountants, I'm telling you. Be part of the society, your social connect is very important. One of the former presidents of Rotary said, Wilfred Wilkinson, he said, connect yourself to a larger world existence. It could be a residence association, it could be a local temple committee, a church committee, or a mosque committee, wherever. But be part of that social thing, part of the social fabric. I'm not saying from the point, but it's very important. Now this is what I said, 300 we have moved on and the 315 finished. Do we have good understanding of the business, revenue model, etc. or are we groping in the dark and saying that finally here I'm signing the balance sheet? It should not be. Entity specific, industry and macro risk assessment in the light of those understanding. It's very important. Yes, in 400 series are no standards. 500 is audit evidence. We did discuss this. Sufficient, appropriate evidence. I think we have been. Sufficient is quantity of evidence. Appropriate is the relevance or the quality of evidence. Now I come back to what Nafra said. I remember I mentioned this earlier. Nafra's 305 page report of IL and FS, 92,000 crores of regulators, 305 page report. I had a cursory reading of that with a lot of academic interest I read. But that can be confined into two points. The first one is the experienced firm of accountants did not exercise professional skepticism. SA 200. They have not been as skeptical as they should have been. Point number 2, they failed to obtain sufficient appropriate evidence. To say this, they are not 305 pages. It's like a movie script. Do we collect sufficient appropriate evidence, written, visual, or and evaluate it for drawing conclusions? We strayed at some point of time. We talked about Dhoni, CSK and all that. We strayed from some point of time. I'll come back to that particular point. Talk about the evidence. So we are asked by this company, which is an industrial area in Cochin, to do a physical verification. So I asked him, sir, it's not supposed to be done by your statutory auditor. Yes, we have statutory auditors as EY, that's SR Battling in Pune. They have decided not to come down to Cochin. One, for safety reasons. Like that point of time, COVID time, they wanted to place it. Two is to reduce the cost. So they asked us to engage the doctor. And I just mentioned your name and they searched about your firm and found you okay. That's what he said. We have websites so they found you. Huh?
Found you.
Found us okay. EY did their research and approved us. So then I said, we'll do it. It has to be done in a day. The reports are so detailed. We said, we'll do it in a day. And they said, a partner has to be there and minimum 3 assistants. We agreed upon that. But most of us, what they do is, we'll pack up and go. But this being a cash-rich company and he being a good friend of mine, I said, our fees will be so much. Engagement letter. It's an email. Fees will be so much and this has to be paid along with the, in the same day as we issue the report. How many of us do this? We think that they would pay so much. But finally they'll say, oh, 1 day is worth so much.
Yes.
And we charge heavily. We charge heavily because we looked at the comparative benefit they are going to get. An EY coming down and staying there in a star hotel, the airfare and all that. We charge heavily. And to say
knowledge of the other man's cost.
So that also you can factor on that. Absolutely nothing wrong. Nothing unethical in that. And I'm coming to the documentation part or evidence part of it. So the first instruction was my partner and the 3 of the assistants have to go to the factory and take a groupie in front of the factory board and send that photograph to them. That photograph is part of your audit documentation, audit evidence. And the whole process, which lasted till 3:30 in the afternoon with the lunch break, the working lunch, was live video streamed and seen by the senior audit manager sitting in Pune. That video file is part of the evidence and documentation test. And around 3 o'clock, they said, we are done. And now you pick up 3 items of raw materials and finished goods and do a random verification and report on discrepancies. They have very perfect systems. They have an SAP, very few discrepancies. And I was so happy the way it was done. We are not saying that Big Four has the best practices, but we do not bother about this. Remote offices. You know, we have a client who had a facility in Calcutta, the storage in Calcutta. The inventory was only about 40 lakhs. But I asked on a physical verification and photographs on that. Or they sent that. But on top of that, my son is studying in Calcutta. So I told the client that my assistant will come there. And my son was doing his law, went with a friend of mine and took some photographs and found that the place is actually there. The place is belonging to this company, the people are there, and that much evidence we took.
Not the material.
Huh?
Not the material.
Not the?
Not the material.
Not the material, no. Material, of course. That is second. That section he could not go. And I didn't pay him for that also. I charged the client, but I didn't pay him. Selfish father. Okay. Anyway, so that's how it is. So we have to go to the extra, run that extra mile. That makes all the difference. Taking things for granted, taking what is so casually, approaching with everything is fine, that preconceived notion is not safe anymore. Now look at this. 500 is not enough, so they have an offshoot of 500. 501. Specific consideration for selected items. And they picked 3 selected items. What is that? Inventory, certain aspects of inventory. Litigation and claims involving the entity. Segment information. Inventory I have already mentioned. He says that the auditor or his representative has to be there to oversee the physical verification. Physically, to depute someone. And that ensure that there's a program of verification, responsible people are doing it. And normally what is the practice? They take a printout of the stock register and move around the racks and then bins and say that tick, tick, tick. The right way of doing it is without reference to any document, people who know what it is, they'll make a list of it and then compare with the next one. Otherwise you have a tendency to say that everything is fine. Here it's a blind. You are saying that maybe that will be around 100. No, not around 100. Please count. High value items, ABC analysis. You don't do all the nuts and bolts, but the high value items you should essentially do. We take a huge irregularities in many places where stock verification was very active. I remember going to a red rubber manufacturing unit as a younger member with denim jeans and a black t-shirt. Now we go to office in light color formulation because they had carbon black. So, not that you have to maybe carry the sacks, moving around on the floor. That's again knowledge of business. We instruct our assistants. It is not enough to sit in the AC cabin overlooking the factory, go to the shop floor and understand. And that's how it is done. So, very, very important. Do we attend, supervise, oversee stock verification? It's a must. Another new client has come this year, it's an audit rotation. They do modern manufacturing in a small town about 30 kilometers from Cochin. They're doing manufacturing modems and they do a turnover of about 150 crores. Short span of time they've come, it's a new client. The inventory is about 18 to 20 crores. And we have decided, being a new client, my partner and 3 of them will go, first and second of April, go into a detailed physical verification. We have instructed them, their team has to be there. First then we would do it, but then otherwise what happens is most of the time inventory in the balance sheet that we sign is only an Excel sheet sent by the accountant of the client to the student who's doing the audit. That is not enough, that's what the standard says. It's not my version of the story, don't get me wrong. Don't look at me as an enemy. This happens, sir. I was asked to, I spoke in Kumbakonam residential program. 140 members were there. My topic was certification, provisional financial statements, projected financial statements. And there 140 members wanted me to say this. Everything is okay. But my point was completely different. You are going to be in trouble. And I made 140 enemies. What the institute's version, I am here to discuss what the institute wants us to do. There is no personal element or any add-ons in that. It's the threadbare analysis of the mandatory standards that we are doing. The second one is litigations and claims. So, we normally ask this question, are there any document? You can even communicate with the legal counsel of the entity. That should be nothing wrong. So you get the answer, case, no case. Then the assistant was director. just have a scrutiny, additional full-length scrutiny of legal and professional charges. Then you get the advocate's bill. Fees for representing the client in PML or Birami transaction. Suddenly the whole thing changes. What? Not only that, the entire explanations given by this person is lost ground. There's a huge trust deficit. He has been taking us for a ride.
There's one company by name Hope 42.
Yeah.
Which you have to pay them on a subscription basis model, where you get the subscription done and you give the SIM number and things like that of the company. They give complete list of the history, whether the civil case or a criminal case or a labor case or whatsoever, which client themselves may not be aware because it's all CST or VAT, all old cases. They themselves would have forgotten. But this particular database, similar to Provis or Capital, that's very useful.
I have heard of the sir is talking about called Prop 42, no? P-R-O-B, Prop 42. That's a portal you can log on to and then. Prop is probing in. Prop 42. I've heard about this.
That's very useful.
Banks are mostly using.
Huh?
Banks
are mostly using. Good. That's good. Prop 42. Again, dealing with struck-off companies and all that. We have a lot of reporting. Prop 42.
When you inform some of the cases to the client, that they themselves, sir, we are not aware where did you get this from. So to that extent, the information is accurate, not with the purpose of fault finding, but to reduce your audit risk.
No, somebody does a research and we can make use of that at a very nominal cost. I think that's a very valuable input. I think I should start using it. Prop 42. I heard it on some occasion, but somehow it was left out at that moment. Do that. Particularly larger audits where all this information are relevant, charges, outstanding liabilities, litigations, of course.
If you don't do it, ultimately you may end up being misconduct.
True. That is missing out on statements and concealment of crucial information. That is when what about true and fair? In the US they say that it is full and fair. It is true and correct originally. So true and correct is we talk about arithmetical accuracy. Financial statements, accounting involves a lot of assumptions. So it can never be true and correct. Therefore say true and fair. But they say in the US the term they use is full and fair. That's about completeness. All that is relevant for the financial year or the period under report has been captured, and there are no material omissions. As far as the completeness angle, it is full and fair. You say that there are no material omissions and no material misstatements, irregularities. Lastly, segment information. This is applicable where the company is, AS 17 is applicable to a company where there are identifiable business segments and geographical segments, primary segments, etc., etc. Where it is there, the auditor has to give extra care. So SA 500 as an offshoot, as an offspring I can say of SA 500, they have a new standard, SA 501. The external confirmation, there are a lot of been discussions on this, on LGB's take on this, they will not give and all that. But then, Institute recently issued, I think the context is that most of us ask the client to put a note, we ourselves prepare. Balances of country debtors and creditors. Now we say balance of trade receivables and payables are subject to confirmation by reconciliation. This is not the right thing to do. And if there is a note like that, this should trigger at least a qualification or at least an EOI. Another thing is where, like in bank audits, in this particular shipyard's case, there was one issue where we issued an EOI. One of the balances they were not able to get confirmation. But subsequently found that by the time the audit was completed in August, 90% of the outstanding was already collected, only the 10%. So it is decided not to, it's almost like a confirmation. The post-balance sheet behavior of the account is also proof. Sometimes we say that standard getting, substandard getting upgraded to the standard as it is that the April 10th, the whole thing is closed. What's the whole point in calling it a NPA, substandard, or we probably would have treated it as a loss asset. But there would have been a bought from the blue kind of something for the organization, and they say that we don't want to be defaulted, we pay the bank in full. So then the loss asset will right away get jumped over doubtful and substandard to a standard asset and will not result in any provision except the blanket provision of 10%.
But if such a change happens after the balance sheet date, how do you do that?
Then that happens after the balance sheet in the case of bank audit.
Yes.
Bank audit, if you're convinced that, then the manager would be at your feet. Because he would have sent already the classification statement. So he would request for a positive MOC. That's the only way you can do that. You cannot make the bank, in the case of bank branch audits, you cannot pass JVs and say correction entries.
MOC.
MOC, positive MOC, saying that.
And we have to give valid reason why we are suggesting.
Absolutely. I was saying in Vizag 3 days back, because the LFAR is not a questionnaire and the MOC is not a sin. Not the sin you talk about, SIN. I was talking about corporate and
CIN.
MOC is not a sin. Unless we show, and we had this general manager who said that, as a branch manager, I used to plead. And he was saying, sir, don't take things for granted. We are using Finacle. The branch and the regional office, if they concur, the due date can be changed in the system. We say that the master can be amended only by the vendor or by the head office, etc. It can be played around with. So something which is past due in the case of a term loan, by virtue of which it should have been slipping to a substandard, can be treated as a standard. So the system.
So after the audit is over, they will again change this one.
But that is not your concern. But during the course of the audit, you have to see certain things which are there. That is window dressing and reducing. The IRAC norms they will play around with. In fact, IRAC norms is not in fact, so it is IRAC-P, income recognition as a classification provisioning. Though the provisioning does not happen at a branch level, that's a different story altogether. Based on that, the provisioning is there. Even for standard assets, there is a blanket provision of 10% at the central level. Audit evidence, written evidence is more reliable than oral evidence. Paper, electronic form, got fine. Is a 505.
Sir, whether signing the audited balance sheet using digital signatures is allowed?
Yeah, it's allowed.
Both the clients and the auditor side.
They have never said that it is physically signed.
Analytics are mostly
No. Word of caution, provided you are signing on the date we are physically signing is correct.
That's true.
If it is backdated, you will be in trouble.
Backdated not possible.
You will be in
The
trouble.
date will become.
So backdated is slightly gone because of UDIN. Now they have
Not only UDIN. The digital signature will accept the date on which you are
that will come.
Very, don't take that risk.
Comes from experience. Should I say, sir, learned it a hard way?
No.
I'm just taking the freedom of, just making fun.
No, when a question came up to me, they wanted a digital signature. Subsequently, I said no.
No, not possible at all.
Not possible.
Earlier on, you remember, we used to sign 5 years balance sheets on a single day and they backdate it.
Backdate.
And in India, good reason, most of the corporate balance sheets are signed between September 1st and September 5th. Not. Date of birth of all the balance sheet will be between 1st September and 5th September. You know why? Aging is a deadline and therefore we backdate. That's not gone now. So now we calculate, there's a calculator we say that when is the due date and then how far you can go back into the past.
The institute is generous enough to give 45 days time.
Yeah.
60 days.
60 days they are giving.
Very generous. Very generous.
It is like the income tax amendment. They said retrospective effect from 1962. When somebody asked why did not go any further down, the act itself is only 61. We wanted to go until 1900 and all.
No, actually, you are given 60 days time to prepare all the audit documents and keep them updated. So
that is strictly not UDIN related, sir. That's strictly not. No, that is in SA 230. If I remember correctly, it is 90 days. 90 or 60 or 90. That I forgot to mention. The audit season we would have done all this, but to compile and regularize, SA 230 allows 90 days.
60 days.
60 days time for. They are called the assembly of the final audit file. The term uses assembly of audit file, final audit file. So which means that the practice is there in US and in UK.
Everywhere.
So there also September 30th is there. Do all that in a hurry and finally post audit, post signing, you do certain documentation, and that can happen on the eve of peer review also. If you feel that something requires to be done, some late sitting will be required. So this is 505 confirmation. Do we obtain confirmation for balances? Now this is only about balances. Confirmation.
Not necessarily transactions. also is required.
Documents, I'm talking about documents. I'll give you this example again. The shipyard which came to us. So opening balance, initial engagements opening balance. So this audit is coming to us for the first time. After 5 years, there's a rotation. Now there is a ledger account land, 2.8 crores. Previous year's schedule, it is 2.8 crores. So in audit terms, tick there, tick here, over. Is that enough? First audit.
Apparently looks okay. Apparently.
No sir, not at all. They say, what is this land? Is it one property or how many properties are there? What is the breakup of this? It's not. You don't call it land 1, land 2 or say that Cochin property, Chennai property, Madurai property. So we call land. Now we ask this question. So there are 3 documents. One is a sea facing property with a yard, another area they have acquired for storage, etc. etc. Now 3 documents. So then the next question is, where are the title deeds? Original title deeds. Original title deeds. Only one they were able to show. 2 properties, title deeds are with Kerala SIDC, State Industrial Development Corporation, because they have taken a term also as collateral they have given there. So you insist on a confirmation from KSIDC saying that the original of these documents are held by them as security. That is about documents. The third one is, we call it outsourcing now. In the earlier days we used to call it job work. I'm a manufacturer and some of the processes I give for, like we had a client in Coimbatore where they used to give this casting for the foundries outside. So 31st March, a few of the items in semi-finished condition will be with the foundry, they call it the foundry. And therefore we get a confirmation for 100 units which are there. And you also try to relate it with the goods out and goods in register and things like that. So documentation, so confirmation of balances, confirmation of documents of title, confirmation of goods and products. You are an agent, consignment agent, and if it's your stock, yes, that has to be. How do you pick up the lot? Selection of the samples also should be very judiciously done. And today there are audit software which is helping us in selecting all this. You know, debtors with credit balances, creditors with debit balances, overseas debtors, non-moving debtors, different categories. And you pick up a sample and finally do. Let us change. If you are nots qualify EOM. If it's nots they have to mention, and it's not saying that vast majority of the debtors have not been confirmed and subsequently not received by conclusion of the audit, then you would surely say that result in a qualification or at least an EOM. 510 opening balances.
If you don't get confirmation of the trade receivable, can't we have the alternative procedure, subsequent collection?
Yes.
Also can be.
I did mention that. That's the same thing I
So
mentioned.
if we can substantially it has been collected, then you need not.
Yes, that's what I said. We brought in about 1.8.
And even if you don't have, then they say the third procedure is you see the documentation, like goods have gone out, other alternative procedures.
That is there, but then still again, if that's a goods are gone out, there could be a dispute and things like that. So that is
No, you have to take the holistic picture.
I agree. Normally it's a moving ledger, moving ledger.
Just because you have not got external confirmation, you can't straight away, come to a conclusion.
I agree with you, not fully, partially I agree with you. That's why that extent, yes. Normally what happens is, a debit of the billing and credit collections are coming in, and then in such case, unless we are doing the audit immediately, some of our audits will get over by April 15, April 20. Those are clients who are already ready. So by that time, this realization would not have happened. There you always give benefit of doubt because in the past, this client has been making the payment in 2 months' time. So the last March, 2 billions are pending. That would get paid only in May, but you finish the audit by. So to that extent, yes, sir, of course. So, sir, that's what I said. SA fights in initial engagements. Is it only a clerical exercise? It should not be. Not enough. Are the balances maintainable? It could be debtors, creditors, inventory, bank loans, mobile property, immobiles, all those things are there. Vehicles, saying that motor vehicles, about 3 crores. Take a breakup of this, or they have the vehicle register, abstract of this, how they have been depreciated. Something has been solved, whether the losses have been recognized, all those things. Analytical procedures, yes, the ratio analysis and the trend analysis, which we have to do. after preparation of this is called, overall test. Analytical procedures come under the overall test. I'll give you an example. This is a rubber-based industry in Kerala, where the 40% of the raw material cost was from natural rubber. Is natural rubber. Rubber sheets, they would, crush that and masticate that and make tread rubber, retreading of the tires. That year, rubber prices were lying very low. Natural rubber prices were lying low. Entire year. So how do you expect the GP to behave? Gross profit to behave?
Profit will be low if there is closing inventory.
No. Your raw material prices have been ruling low throughout the year. So how do you expect your GP?
It's a GP.
GP will be more.
GP can be dependent.
No, other factors remaining the same. Other factors remain, the direct expenses remaining the same. If as a this thing raw material prices.
If it is a retrading unit, GP will be more.
No, sir. Any industry, if during the year, if your raw material prices are low, without a corresponding reduction in your
net price, selling price,
then naturally
profit
GP
will go up.
But in this case, we found that the GP was
low.
So do we stop there?
No.
Ethical procedures will also include investigating into adverse trends and seeing what are the issues and how I know. Don't laugh. This actually happened. The final inventory statement was an Excel sheet. The assistant had missed out 6 rows of the Excel sheet to be added into the top.
Missed out.
Which was 1.2 crores. Silly thing, but then this happened. Did you get me clear? So that is something which our vouch and post transactions, routine checkings may not reveal. Finally you say that, oh, this is a macro test I am going to do. That's called overall test. Ethical procedures. Audit sampling. How do we pick the sample? Most of the time it is judgment sampling. The student would come and ask, sir, what should I do? Go do vouching. Okay. Which all months? August and November. Last year, which all months we did? July and this thing. So you do November and August. Now this is judgment sampling. The idea, the standard says that your sampling process should ensure randomness. The most essential attribute of sampling is that there should be randomness. If we are from the audience, every one of us should have equal chance of getting, equal probability of getting picked up for a test or whatever. For that today, judgment sampling is not enough. We have to use statistical methods. Technology we can use. A lot of things are there. I used to confess till last year. Last year we have started using an audit software called Azure AI, where in the materiality levels, I have not started working on very seriously because this year I may not be involving for certain reasons. So partner has started working on it, and most of the big clients will start using this. There's also, I was told that I'm not marketing. There's another software called AnyAudit.in. AnyAudit is said to be more effective than Azure AI. Many of the members have started using it. But I realize we have been, for mid-sized firm like ours, have been late in getting into using an audit software. So where the randomness is decided not by my selection or my judgment, it is decided by technology on a random basis. So it is system driven, therefore it is more defensible. As we discussed, more defensible.
AnyAudit.in.
AnyAudit.in.
Otherwise, we can go by a simple stratified random. Normally, in any whether you are payment or this or any other item, if you do a normal stratified routing, then it gives you at least that all the top valued items are pushed to the top. So mostly good amount of value will be there. So that can be taken up for 100% verification.
Yeah, that's also
maybe the rest of the items can be, as you say, we can mark stratification in that sense. That will give us with a randomness.
Actually, I think Excel has also.
Yeah, Excel. With the help of Excel only we can do this to a certain extent. Those who don't have the
all those filtration, all those. But the point is to say that the selection of the sample should be with minimum manual intervention.
Yeah, that is what.
It should be system driven. It should be defensible. That's the whole point.
Once we have a, probably as you say, software type of it, then the software picks up.
Softwares have really started, we started using it, slowly getting used to it. Otherwise, it's manual testing. I'm reminded of this example. Mr. Nityananda was the past Central Council member. Some of you remember. He died last year. So So he used to talk on this particular standard and say, in Bangalore, a student was sent for vouching. So the boss was busy as usual. And the boss said, you go and do this August and November vouching. And the student comes back in 1 hour. Boss, what happened? Sir, I finished vouching so fast. There are no vouchers in August and November. You know why? There's a mango pulp making unit. So the mangoes, the right mangoes are brought in. Seasonal, it's only functional for the 4 months. 8 months is completely the factory is off season. And there's a security, only the watchman is there and some stray dogs, as you see everywhere. So there is a guy comes back. So this actually happened. It's an exaggerated example. So the boss judgment absolutely going wrong and saying that boy coming back and saying that boss you've gone wrong. So sampling is that?
Excuse me, sir. What should be the interplay between, ICOFAR, where you have to select samples and the sampling here? See, ultimately you need to go by the test of controls, and after test of control you will do substantive tests. But if you are going to select for the control testing all the samples, there is a question of, again coming back to this.
No. Sir's point is, this very brilliant point he has asked. It's a term which probably people are teaching auditing would recall, that the initial control procedures and then the compliance procedures and then substantive procedures. Compliance procedures are primarily the test of control. So Sir says that pick up a certain sample for analysis of the controls for the compliance procedures. And then based on those findings, or based on the comfort you derive or the lack of comfort you derive, you decide on the extent of substantive procedures. That is a detailed transaction analysis. The examination, the religious scrutiny, verification, etc. etc. So for selecting the control aspects, you have to have one set of sampling, and then further going on substantive procedures, you have another set of sampling processes. And ICOFAR is a complete picture of all these things together. Finally, we have to report. I hope all of you are familiar with the term ICOFAR. It was internal financial controls initially, but the institute finally said that we cannot be expected to have all the discussion, all the reporting on all the operational controls, etc., etc. So it was then being reduced to internal controls over financial reporting. That is ICOFAR. So wherever applicable, we have to give a report. Today, in a medium-sized company, we have the main report, we have the CARO report, we have the ICOFAR report, and if you are a C&AG audit, it's about 45 hours. So 4 reports, it runs into bulky, maybe 15 pages. I hope I answered the question.
It's very small set of company, this control testing or control existence becomes a very kind of a problem because their softwares are not so great. Even in Tally, whatever you do, you will always bypass, you can override. Unless it's a very medium or big size organization with an effective software where you can test your thing. Otherwise, okay, whatever you do, you need to still go through the substantive procedures. Without that, you cannot be satisfied.
Yeah, that's true. Even in a smaller company, I agree with you. But the first round of test of controls, like you're saying, that's a single person handling it.
Yeah.
We talk about in one of the called thing in internal controls is, segregation of incompatible functions. Here is a company where the owner is there. It's a proprietary concern with, let's say, 20 crores of turnover.
Yes.
Proprietary concern. We had a client here.
One accountant will be there. You will be
proprietary there, and one
one
accountant sitting there. There, of course, you have to apply a lot of judgment and evaluate the controls. That's a legal software, Tally being used, and then the Tally reports we have to see. Internal control, the stocks we have to see. Based on that, if you feel that they are all very weak, then you will go for more extensive checks. That's how I thought.
Yes.
But essentially, there has to be some element of compliance checking initially. Use rational methods, technology, and even Excel sheets to the extent possible. Going concern, we can take another 10 minutes. Haman has already come, so I thought it's time to wind up. Another 10 minutes, is that okay?
No, come to the
okay.
or what?
Huh? Sorry?
Can we break for tea and come back or what?
No, I think we'll be done in 10 minutes.
Yeah, we'll complete.
Okay. 10 minutes. Okay. Then the speaker always says that another 10 minutes, but here we'll conclude in 10 minutes. Somebody can have a bell. Okay. Now, going concern, technically speaking, is an accounting assumption. Accounting standard 1 says going concern, consistency, and accrual are
assumptions. Basic assumptions.
But in a given dynamic changing world, according to me, going concern is no more a safe assumption. The perpetuity of business, the perpetual nature of business are getting doubtful day after day. Obsolescence, technology changes would make you completely outdated. So therefore, one has to be very clear. And also situations like the epidemic which has happened. Okay, pandemic, the COVID. We thought the entire tourism industry is going to die out. But those who survive today are thriving.
Are minting.
Sir, there's a term called, what they call it as revenge economy. Revenge spending, revenge tourism. People who have not been able to travel are spending with revenge. It's actually there's a bounce back in the economy.
Yes.
A lot of savings and all that has happened and then they are spending. So that has come back. But that point of time, we had this issue whether they'll be able to prolong. And they used to give this explain, we stay on, we cut down the salaries by 30%, we retrench people, but we would like to go on. And those who waited has proven right. But some of them, restaurants and all that, high value restaurants, many of them closed down. So that has been Kerala experience. Some other industries, retail business, some of the retail businesses.
Hospitality industry was the first one.
Yeah, that was the worst hit and then they bounced back. Okay. So here going concern is missing. So do we think about this and analyze the situation? Indicators. What are the indicators of going concern? Volume reduction, substantial reduction volume, management disputes, and staff retrenchment.
Net worth negative.
Net worth negative. Statutory dues. Non-compliance statutes, not filing of returns.
Unable to pay their debts on due dates.
On my way to Palakkad yesterday, I travelled by bus and I called, I wanted to have a business taken over by another business group which is in the same industry. So I called a friend of mine from that place and I asked him, do you know this company? Yeah, I know them, I am their auditor. I said, how strong are they physically? I said, what is this for? I want them to take over another unit which is in the same industry. So my fees for 2 years is not paid.
So that is gone concern.
If it's more than 1 year, you are a related party. As per the new code of ethics, if you give more than 12 months credit, you are a related party. Anyway, so this is very important that going concern has to be very critically evaluated. And as we said, 105 says, then non-current assets would also be held for sale. You have to have a lot of write-downs and write-offs, etc.
Sir, for more than 12 months, if we give the credit to our service receiver or client, then we will become a
related party. I'm not fully vouched on that. It's a recent notification. This comes as part of the code of ethics. You are doing so much favor. So unless he's a related party, what should you do? How it is the only industry which gives 12 months free credit. And I was told that he is a very strict auditor. Sir, you are a strict auditor. I said, what do you mean by strict auditor? He will not do current year's audit until and unless previous year's audit fees is paid. So that's a strict auditor. That happens. We are very lenient that. In our office, let me tell you that we write on below the bill, our fees is charged on the basis of expertise rendered, expertise delivered, services rendered, time spent and expenses incurred. And all our bills are payable immediately. And we do not use credit for one-time assignments at all. It is only for audits. And we don't have outstanding of more than 3 months, I mean for 30 days. Except for very, double hit cases where on humanitarian consideration we will give, but not beyond a certain stage. Now I remember having, talking about long back to a client's accountant when I was relatively younger saying that, Mr. Nair, our bill is due already, now how do you pay? So it's very tight here. Then I walked into the MD's room. In those days he was firing a travel agent. How could you book me in economy class? He's going from Cochin to Bangalore. He was firing the travel agent for booking him in economy class. He wanted business class. I came back and said, because he said, your MD is contradicting what he said. He said, write my bill. And almost like a Karawa, I sat there and got the bill. That's a different story also.
No, taking his question on the bill is not paid for 12 months. Can he do the next year audit?
Yeah, that I have to double check. That said, I did not vouch for at this point of time. I was only told I have not referred this. But there's something in the same spirit of it, something has come. Where you have to come. I will not, authoritatively vouch on this.
So you're not supposed to sign the audit report next year without collecting the previous.
That is also there.
Not supposed to sign?
Yeah, because you basically are related.
Independence is vitiated.
Independence is lost.
Supposed to be all independence.
That way, undue credit then one way it's good. At least for that reason, we'll tell the client in Anyway, we have, I said 10 minutes. All these questions will delay my presentation, okay? Now we'll go super fast.
No, we will give you extension.
Okay, no problem. SA 580 written representations, MPV is MRL. And the key point to be understood is that written representation is to support other auditors. And it should not be seen as a substitute for, I'm not doing any of the substantive procedures, as I rightly said, and say that I obtain a letter of representation, management representation, 10 pages, and I'm saying that the audit is done. No, that is only additional comfort. Making the management vouch and endorse for what they are responsible for, and saying that, we do not have such and such transactions. We have only these bank accounts, we do not have any other bank accounts. Inventories are in good shape, and they are saleable.
Clients are asking us to write the MRL and give it to them for signature.
MRL, that's how we do.
It suits you, na? So whatever you want to put, you can put it. To save your skin.
Don't expect the client to prepare the MRL. Prepare the MRL.
When the scope of work is
Scope of work you would have defined in LOE, letter of engagement. Scope is all defined. But without defining the scope, you can
even initially before giving the engagement assignment itself, they say that okay, whatever the scope of work, you write it down and give
that
it.
is LOE, sir, precisely. SA 210. That is LOE, letter of representation. Sorry, letter of engagement. Engagement. So please understand that there is no marriage without an engagement. Except in certain communities. So there is engagement, there is courtship, and then you get married. Even with that, we can have problems. Okay. Now, do we obtain MRL? As they have been updated? If not, we must, this is spelling mistake, update the MRL every year based on new items. And 21, 22, for example, stuck off companies, compliance with all these things, you have to get it confirmed by now. That brings us to almost the end of the presentation. Yes, SA 700 is about the reporting, title, addressee, opinion, basis of opinion paragraph, going concern. Key audit matters was applicable. KIM is only applicable to listed companies now. Management responsibility, auditor's responsibility, other reporting responsibilities. Now, other reporting responsibilities, what's the new thing which has come from this year? Audit trail. And the IG has come. Implementation guide has come on audit trail. I think we need support of a techie without which we can go full justice. Signature, date, place, and UDIN without fail. The audit matters will skip. SA 785 is about how we qualify the reports. Let's see the question first. Are we so used to clean reports? Is there a scare? MB was talking about in the morning. Are we scared to issue a qualified opinion or adverse opinion? Issue the most, or there also is a spelling mistake. Is there a most appropriate opinion is that we are issuing? So a clean report is that Tom is a good boy. A qualified report is, except that he is a heavy smoker, Tom is a good boy. Except that he is a heavy smoker, except that he is into this, 1, 2, 3, 4, 5, then technically speaking it becomes material and pervasive. At that point of time, you would slip from a qualified to adverse report and you say that Tom is not a good boy.
So your engagement will be over.
Huh?
Your engagement will be over.
Not really, sir. Don't be scared.
You should know which engagement.
Okay.
How many number of qualifications you can have, number of points you can have before you go into address?
Then we cannot define the numbers, the intensity of the numbers. We cannot put down the numbers. And in this particular state PSU, MB was also talking about a PSU. State PSU where issued the adverse report, a huge inventories could not be counted. They were kept in the open yard, rusted, handheld gillets. They are making it. And 60 crores of year-end turnover. There were no, what is that, bills, GST, what is it called?
Tax invoice.
E-way bills were not there. Dispatches had not happened. They are all made up. And CRDG called for a meeting. Very objective, Mr. Sunil Raj, the Municipal CRDG of Kerala, called for a tripartite meeting. And he called me, George, you should adverse report. Why did you issue an adverse report? I said, sir, this is 705. The standard which tells us situations where we have to issue an adverse report. And there are 12 reasons for issuing this adverse report. 12 numbers in this case. If you have the time and patience, I will read it out all the 2 reports. Because when we issue a qualified report and adverse report, you should expressly state the reasons that if I say that Tom is not a good boy because 1, 2, 3, 4, after 4, 5 or whatever, it becomes Tom is not a good boy. Okay. I read out all that. Then he stood up and said, "What are you doing? How do you expect this auditors to issue a clean report after having so many lapses? Go and correct yourself." And there are only two demands. One is remove the auditor. The company wants us to remove. They don't want this kind of auditor. Very troublesome. And they refuse to increase audit fees. But then it became, the thing is that even if there's no fees, I told the CNG, sir, they had approved for an enhancement of the fees from 3 lakhs to 4 lakhs. And then we said that we're going to adverse report. They, somersaulted and said that increment is not there. Sir, then Malayalam, I said, became washing. I said that even if there's no fees, I would have done this. And sir, please note that I am the one who requested the CNG to do a supplementary audit. The supplementary audit was not done for 2 years. And we were found fault with. After saying all this, my team had left out, other information paragraph was left out. And there was one more mistake, which I explained in detail and went to Trivandrum and explained the case. Make sure that, I was very apologetic about it. I was standing kind of, with hands
Please
up.
save me.
Hands up. I said very shameful for me to come and say this because I preach on all these things and this is a clerical oversight, but then there's no excuse. And they don't seem to be taking any further action, and we have been appointed for 2 more years. So the company is totally upset and irritated.
The first year of audit, sir?
The first year. Another case, we issued a disclaimer. Disclaimer is where there's a management dispute, information was not forthcoming, so lack of information mostly results in a disclaimer.
Disclaimer normally we give when even the basic books are only those
basic
things.
books were there, but the required information was not available.
But which is a better report?
You cannot compare them. There are two different situations. And those is that there are a lot of issues which would vitiate true and fair. The other one is that we are not getting information from an
So you are not able to form an opinion.
To disown it. You lift your washing your hands.
No,
In the case of
you are lifting your
lifting or rather washing your hands off.
You are unable to
In
verify
Tom's case,
stocks, unable to verify stocks in some other place, or maybe they don't show you the data, they don't show you many other things.
I always give this analogy, sir, because I've been practicing for 31 years. Sometimes I get a call from my native place. Joe, this is Sannichal from my hometown. There was a girl called, Annie Varghese who did articles with you. How is that girl? This is for a proposal. My cousin's son, there's a proposal. I said, Annie Varghese is a wonderful girl. If I had a son, I would have surely got a married to him. So good. Of course, there is inherent risk. The second one is, Annie Varghese is okay, except that she's a loner. I'm just giving. It is not a team player, she's a loner. The third one is saying that Annie Varghese is better. That is adverse. The fourth one is Annie Varghese, I don't want to express an opinion. You ask somebody else. That is a disclaimer. The same thing applies here. So are we used to clean reports? See, a few months back, I think it was in Belgaum. I was addressing a large audience. I was surprised to see that for company we have about 180 packed audience. The senior member asked me, Mr. George, in the computer system there is already a clean report. Why change that for what else?
Maybe it has got a virus. It has got a virus now.
Maybe. I'm not talking about seniority or, due respect to seniority, but there's very wrong thinking. All wrong perception. He's finding it so difficult to edit the auditor's report. That's the only issue. It's so dangerous. Issue the most appropriate opinion that we have seen. 706, yes, is emphasis of matter paragraph. EOM is a safe, soft option than a qualification. Use it appropriately. A paragraph which, it is resolved, but you feel that it is less than a qualification. That brings us to the end of the presentation, but quickly, as we conclude a few things.
In the example given by you, you said you failed to give the other matters?
No, other information paragraph. That's other information paragraph which we disown. That is about the other information contained in the annual report, which is part of the auditor's report. Other information paragraph. SS 700, it has that. So that was left out. So somehow the editing happened and that was left out.
Where that will fit in?
Other information is after our opinion, basis of opinion paragraph. After that, other information.
Before the other statutory.
Yeah, other regulatory agency. That's it.
Other regulatory. Before that.
Yes. So let's empower and let's change quickly. Infrastructure and technology, how much we talk about. It's very important that we invest in infrastructure and technology adaptation. And you saw how many marks out of the 280 marks in practice management. 80 marks are given for technology. Somebody asked that question and we went back and on the audit tools. I think sir asked on the audit tools, right? Audit tools, lot of them we have to use, digitizing the entire operations, attendance, monitoring the work, etc. All those things, very good. So technology is huge, and when COVID struck and we are not able to go to offices, we said we are not able to have remote access. So suddenly we started, developing VPNs and remote accesses. At a small cost, we could do it. So wait for some calamity to happen to gear up for the next level. So now today it's on the cloud, and I can sit here, go to my room, and the comfort of this, I can access the office information, I can access the client information. Of course, subject to the scripts and all that, we have to have passwords and controls. People and processes, we discussed already. Good team of people, ensure that we have good processes. Billing and collection, agree upon the fees in the first place. After I came in here, I was MBBS, I had a call from another chartered accountant. His brother's company is now up for investments. Investors have found jam in that company. So they're going to do a due diligence from the investor side. Some of them are from the US. So he wanted our firm to do a due diligence before they do the due diligence, a cleanup as he said before that. So we're discussing that. So where he's a friend of mine, he's a senior chartered accountant, but I will surely before signing up, I said, sir, this should be office. Another dear friend of mine last week referred to me and said that sports association in Kerala. He said, Joe, the systems are very poor. I wanted to do a system study and separate studies. I personally went for half a day, evaluated with my confidence, went there for half an hour, and then I sent a mail the same evening. We've done a preliminary evaluations, and the observations are 1, 2, 3, accounting backlogs, statutory non-compliances, the refund spending, lack of MIS, 5 points we wrote down. And said that we are happy to offer our services. The time frame would be 2 more weeks from signing up, and our fees will be 1 lakh plus taxes. It will take me only 2 days, not my assistant. In 2 days we can do ancillary products. And it's not the quantifying I mentioned, but we should do this essentially. Agree upon whether it's a friend or you think that client, you think that the client would pay 2 lakhs. Client would think that he would think that client will pay 2 lakhs. Client will think that sir will do it free. You should draw at least a line in between. Okay, that is there. And financial planning, of course, that's personal. We do business plans, financial planning for our clients. But many of the chartered accountants are going into self-financial planning. It's very important.
Zero. Failure.
Sir, we had to collect, I'm so sorry to say that we had to collect money for buying coffin for the chartered accountant.
Oh, God.
No, life insurance is not there. Medical insurance is not there. The family doesn't know. They left high and dry. Which bank account? I always tell the members, particularly if your spouse is not involved in your practice, if she doesn't know, give a report of assets and liabilities to missing bank account, access, whom to contact, all those things. I do that. My wife opted to be a homemaker, though she's a rank holder and all that. So at least after 2 months, I sometimes forget, and last week I gave an update. Update and all those things, mutual funds, whom to contact, all those things. Make sense. So financial planning is very, very important. Now my uncle was a retired professor. I'm filing tax returns for him. The UGC pensions are very high.
Yes.
So we're filing a tax return. And last year I found 80D missing. I called Gujarat, what about medical insurance? For 3 years nothing was there, so I dropped it. The classic, typical Indian thinking is that the misfortune will always fall on the neighbor, not on you. I will be healthy and live till 100, no health problems, no accidents. My flight will never crash. Only the neighbor. But the Japanese thinking in insurance, Japanese thinking is that the insurance is what I would earn if I live till 70 years, and then the legacy I want to leave behind. That is the insurance amount that think about. That's why Japan has a completely different culture. Now the last but one point, sir, is that we have to make, if students are there, if students are not there also, this is very important. I'm very proud to say that we have a huge inflow of students after it. I did mention that. It is because we developed an academic culture over a period of time. We can no more treat them as workers, laborers. They come with the aspiration of passing chartered accountancy. We have to provide them a healthy platform of learning and development. But in the process, we get a lot of inputs from them. Train them, support them, pat on the back, and sometimes knock on the head. Carrots and make them very friendly, a fun culture. I did mention we went to Goa, our office tour, annual office tour. So when you go to Goa, it's right to say in Mumbai, in Chennai, when you go to Goa, evenings there in Goa is a lot of fun. So even having a drink with the students, to that extent sometimes, I don't think it's a sin. Not that everyone should do it. Also having an Onam celebration or a New Year celebration.
No, it's a family.
It's a family, yes.
It's a family.
And today we have we celebrate an iftar also during Ramzan time. We have a good number of students from the community. We are not getting community specific at all. We have no Christmas celebration, it's a New Year celebration. Onam is, even I think in Chennai also, all the Malayali, Onam celebration. So we have this, we have internal training programs. So academic culture and the student friendly economic, decent stipend.
It carries marks.
It carries marks, yes. I think we'll score well there. And lastly, end of the day, what matters is, let us not forget that we spend most of our waking hours in office, not in our house. The time we spend in office mostly will be
In the
will be
office.
particularly with habitual late sitting. If you're going to office at 8:30 or home at 8:39, then it is only time to have dinner and sleep. But the office is where we spend a substantial amount of time. Office has a pleasant working environment. We have, spacious mansions, residences. We have luxury cars. But the office environment most of the time is suboptimal. I've seen sometimes office, the lady assistant have to go down to the provision store, get to the key for the washroom from the chetan there, and then use this. Very sad. We should create a healthy, hygienic working environment, particularly with large number of students. Girl students particularly will be taking that. So all these things are very important. So what happens is that when we leave the organization, internally there could be being partners, there could be difference of opinion, but all that we should do, I think, is to create a healthy, happy organization. That really helps. I did mention about the health issues also members can have if there's a lot of work stress on the clients and at the workplace. The workplace should also be pleasant. Play some music if you're working a project report. Have a headphone, listen to some good music. I'm a great lover of Ilayaraja music because Rahman was not there when I was doing articles here. So all the Tenmadre Vaige Nadi and all. Murli sir says, Jomon, I still remember you tap on the table and sing Tenmadre Vaige Nadi. All those things, those days we had good time in Chennai. So thank you so much, my colleagues, for staying back for so long. Good interaction. Get me going and we've gone and on, but I think I can put 10 minutes. How many minutes is now? 20 or 15. Anyway, sir, we have the extended time.
Thanks.
Approval from the senior most member. Thank you so much. This is my contact number. Feel free to call me, message me anytime on anything that is of relevance.
It was very nice being